All right, so yo, what up for you guys watching this on the YouTube replay? We had a pretty red Friday. My portfolio is currently down 4% the past week. I'm finally back, so we're going to be doing another live stream tomorrow on Sunday. So, hey, if you're watching this on Saturday, we're going to be streaming tomorrow as well. But I wanted to talk about the SPY, and then we'll look at some stocks right here. So basically, if we look at the S&P 500 right now, it kind of because we kind of gapped up here, we opened higher, but we've really had 5 red days in a row, 5 red candles in a row. So the market is clearly not too happy right now with the jobs report, but we have some other stocks that had some great numbers. We had a lot of earnings last week. Like, did SoFi report earnings? I don't remember. They did report earnings. Dude, SoFi earnings were incredible. And also, who reported on Friday was Reddit, or actually, it was on Thursday, or yeah, Thursday. So I want to talk about Reddit's earnings as well because Reddit had some incredible earnings. Yo, what up, Plasma? Good to see you, man. So yeah, and then I have some stocks that people requested me to look at, and we'll pull up a few of those, and then we'll look at some in the chat here. But Reddit had just the most incredible earnings I've ever seen. I don't know how Reddit pulled this off, but basically, if we look at their revenue year over year, it grew 77% after growing 53% the previous year. So I think Reddit, this huge stock price appreciation is absolutely justified. On top of that, this is a completely unleveraged balance sheet. They have no debt whatsoever. They have $2 billion of cash. And look, their cash pile keeps on growing. Let's see here. So if you kind of look in the top right there, it's now 2.06 billion, up from 1.7 billion. And so not only did the revenue grew an impressive 77% year over year, but look at the net income. They made a record 90 million of net income. So really impressive numbers here. Look at the FCF, which is free cash flow. Reddit's now doing 100 mil of free cash flow a quarter. So anyway, that one's really cool. I can't wait to see the growth there. But yeah, let's go look at PayPal right here. This is a huge buyback place. PayPal's buying back their own stock like crazy. But I think the reason they just reported earnings. This is very interesting because I want to see if they're growing. So, judging by their huge stock price decline, I'm guessing they didn't grow too much, but let's find out. So, if we go to revenue, so the revenue actually did go pretty solid. Revenue grew 5% year over year on PayPal. Net income grew 17%. So, hey, that's actually pretty good. They're growing their margins a bit, 15% net margin. Free cash flow, though, that's what FCF stands for, did fall 50% year over year. So they must be, let's go to the cash from investing activities. Well, it's kind of choppy, but anyway, if we go to PayPal's cash flow statement, here's how much they're spending on buybacks. So we just go to the cash flow statement and look at this. They're literally spending 1.2 billion every quarter of buying back their own stock. And what's the market cap? So they're spending like over 5 billion a year buying back their own stock, and they're a $64 billion company trading at a 14 PE. So actually, I think PayPal's a pretty good buy and hold stock. So yeah. Samuel, what's up, man? He said, can you talk about Amazon? Yeah, dude, Amazon earnings were really good, but the guidance was bad. Yo, what up, Josu? He said Lululemon. Yeah, we'll look at Lululemon as well. So another company that reported earnings on Thursday, Friday was Amazon. You can kind of see they gapped down pretty bad there. So I want to look at their earnings as well. I remember when I looked at it, they were pretty good at first glance. Like, yeah, here's Q2. So, this is actually the bad news, the free cash flow. So this is a Mag 7 company. You can't have a company really have no free cash flow this and last quarter. So not great for the free cash flow. I mean, the operating cash flow is still really good. Here's why the free cash flow is negative on Amazon. It's because they're so innovative, and I'm actually okay with it. But if we go to the cash from investing activities, this is the money they're investing in new assets, maybe building out their infrastructure, buying new companies. They're literally spending they spent 40 billion in the most recent quarter. I mean, that's insane. They're such an innovative company. They're also deleveraging their balance sheet here. If people ask me what I mean, like, look at this number right here. I kind of have my cursor on screen. It went from 57% to 51%. So this gap widened. It's great news. You own more of the company. And also the net income growth was incredible. It grew 34% year over year, 18 billion. I mean, they're going to be doing 20 billion a year. If we go to the net margin, I mean, the net margin grew 18%. I mean, this company now has a double-digit margin. Amazon used to be a tough business. It was a single-digit margin. So anyway, Amazon, I do like them, but I think the free cash flow numbers was a little disappointing. And I think the AWS business showed a little bit slowing growth. Still really good growth, but slowing growth. Wow. So here's Lululemon. Yo, what up? What 1.5? What's up, man? Marsa said, "What app is this?" Hey, yeah, Linktree and Bio, very first link. It's a brokerage I'm on here. But anyway, here's Lululemon. This company, I mean, look at this. They fell on earnings and then they bled out, had a little recovery, and then are bleeding out again. So I actually think this one might be worth a nibble here. I don't think their earnings justified this much of a sell-off. I mean, what's the PE of 13? I mean, this is a commodity multiple. I mean, they do just sell a commodity, but Lululemon at a 13 PE. We can see their number of stores. It went up by four, six, seven, or 767 to 770. Anyway, here's kind of the bad news, and it was also the guidance. But if we look at the revenue, the total revenue on Lululemon grew by 7%. So the revenue's up, but the net income's actually down 2%. So what does that mean? It means the margins fell nearly 10%. So but I do think that one's pretty worth pretty worth maybe nibbling on. So any idea about Nano Labs? Hey, what's the ticker symbol on that one? Let me know. I'll check it out for you. NVO said, did you, or Joseph said, did you buy any NVO? So this company reported earnings, and I was not expecting this. This company tanked on earnings. So if you're wondering what is NVO, this is the company that owns Ozempic. So this is the weight loss prescription company. If we look at their revenue, 95% of the revenue comes from their obesity care products. What's the app? Yo, Josh, this is actually a brokerage. If you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. It's called Moomoo. Anyway, let's go look at their earnings. So 2025 Q1, they beat on every metric. So that's the odd part. They beat on revenue. Wow. Wait, so this obviously isn't in US dollars. We'll switch it to US dollars, but they made 4.2 billion in US after-tax dollars the most recent quarter, up 15%. I mean, incredible numbers. You get a 3.33% dividend yield. Actually, another one that I got to do some more research on, but I do know their Ozempic patent expires in 3 years, so that's not good news. But MVO is really interesting. The financials are incredible right now. S&P 500 future predictions. Yeah, hey, I kind of covered this at the beginning of the stream. I wanted to also recover it because there wasn't many people. But what's really weird is the S&P has kind of been down for 5 days in a row. We did open higher on Thursday here, but we've had 5 red candle days in a row. So I'm curious to see what happens next week. I am happy about there finally being some dips we'll be able to buy. So someone said, did you buy the dip on Progressive? Yeah, hey, that is one I do own here. So check this out. And we are down 5% on Progressive, but I do really love this company. This is an insurance stock. I like being fully transparent. I'll show you every stock that I own, how much I'm up and down on them and stuff. And I sell nothing. No, I don't have a course book, Discord, literally nothing. Just on here giving my opinion. But check this out. Here's what I love about Progressive. Great insurance company. You've probably seen the commercials. And hey, yeah, we'll look at what up, Nate. We'll look at SoFi too. What up, Connor? AMD as well. So look at their personal lines. I mean, insurance business, obviously a great business. I mean, the revenue's up 23% year over year. So the revenue is literally at a record, 61 billion for the full year 2024. Same with the commercial lines, also at a record, even though that is a smaller segment of revenue. But yeah. Anyway, super growthy company here. Best part is the bottom line, that the net income, the after-tax profit, it's up 117% after being up 300% last year. I mean, I'm shocked. So Progressive, great company, deleveraged by 5%, and this company is making so much money. They do a special dividend every January. So they normally pay you just 10 cents a quarter. But look in the middle of my screen. You see that 4.5? They paid you a $4.5 special dividend just because they can easily afford that. So yeah, hey, what up? The 25th, what's up, man? What will happen when their Ozempic patent expires? I don't know. See, that's a good question. So Nate said SoFi. Then we'll look at AMD. So SoFi just also reported earnings, and I'm super pleased with them. So they're one of my been one of my best performers here in my growthy portfolio. We're up 13% all time. We've definitely underperformed the market, but here's SoFi Technologies. So I regret every share I've ever sold of this company, but let me show you their earnings because they were really good. This is one I think deserves this crazy stock price appreciation, So, and they're just one I'm just going to hold for the long run. So if we look at their revenue right here, the revenue grew 42%. That's the highest amount of growth I've seen for this company in a very long time. So 42% revenue growth shocked me, first of all. And then they also made 100 mil of net income. I mean, people are really taking SoFi serious. They're making net income every quarter. And look at this. A lot of people know them for their student loans, their loan business, but they have their own banking charter. They're a fintech. And look at these financial services revenue. I mean, this is why they justify the high PE. I mean, the revenue is literally just on the financial services is up 101% year over year. So That's what I really love about SoFi. I'm super happy with the earnings. And low key, if they fall more, if we get like a dip under $20, I might add some more shares just because I really like them. So let's go to AMD as well. What up, Connor? So AMD is another one I do own here in my growthy portfolio. And hey, hope y'all are having a good Saturday. What up, Alpha 2A? Yeah, dude. So AMD right here, they've really been crushing it since April. They've actually like outperformed Nvidia, I think, just since the April bottom. Like they're up almost double, which is pretty crazy. So here's what I love about them. Obviously, they sell GPUs. They have a 17% PC GPU market share. But check this out. I love them for the data center business. You know, they can cut out the middleman. They make their own GPUs, and that's what data centers need, a bunch of GPUs. So they can just supply it themselves first and for the cheapest price. So look at that. The data center revenue is booming, up 60% year over year. We can go to the FCF, which is free cash flow. It's up 91%. Incredible. Net income, 700 million. Incredible. And they also have no net debt. I mean, look at this absolute monster of a balance sheet. So AMD is one that I'm holding. So I might be a little biased, but that's one I'm really pleased with. They're no longer advanced money destroyer. They're actually advanced money duplicator or something. Do you have a Roth IRA? I do have a Roth IRA. I can show it if you'd like. What is SALTX technology? Yeah, hey, give me a ticker symbol on that. I don't know what some of these stocks are, so give me the ticker symbol and we'll check it out here. So, what app are you on? Yo, Amar, this is actually a brokerage that I'm on right here. If you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. But oh yeah, hey, we can look at Palantir as well, man. Palantir. Yo, what up, Terry? Do I invest in any high growth ETFs? I don't own any ETFs right now. But I do love QQQM. Oh yeah, well look at American Superconductor. What's going on with IONS? Hey, well look at that one too, Samuel. So let me look at Palantir real quick, and we'll get to those. Yeah, hope y'all having a good Saturday. Oh, and Shopify too. These are all great stocks I want to cover. So first off, Palantir. A lot of the revenue actually comes from the government. So many police stations use the Palantir software, and look at this. It's up 45% year over year. So the government revenue is booming. The commercial revenue is up 33% year over year as well. And if we just go to the revenue, it's up 40. Net income's up 100. I mean, just fortress of a balance sheet here too, no debt as well. So Palantir is super growthy, but I do think that one has a high PE. It's a little bit too highly valued for me to buy in there. But AMSC, so this is one I've recently been talking about. This is American Superconductor, and they had really good earnings. So I'm glad to see the few. I don't own this one, but they did really good on earnings, so I'm glad to see that happen. Let me show you the earnings, by the way. So the net income was 6.7 million, up like crazy from the previous year. So they're the most profitable they've ever been. Like, look at this. The revenue is up 80% from the previous year. These are the kind of stocks I want to buy and hold for the long run. Revenue's up 80%. They're most profitable they've ever been. You know, they used to lose a bunch of money every quarter. Now they're making net income every quarter, you know, a couple mil. What's the market cap on this company again? I do wonder. A $2.4 billion company. So yeah, seems pretty fair. Oh yeah, and what is this? IONS, just subscribed, you locked in. Yo, the 25th. Thank you so much, man. Yeah. If y'all wanted the subscriber follow button, we stream every day. I'm finally back. Trevor said, what app is this? Hey, it's a brokerage. It's in the link tree in my bio, the first link there if you want to get this. So someone said IONS stock. They're a $6.8 billion company. It's a pharmaceutical company, but some of these are pretty decent. So I guess let's go look at the financials here. So if we go to the revenue, yeah, hey, look at that. The revenue jumped up 100% year over year. So that's actually a very solid quarter. $500 million. And on that, they made 123 million in net income. And that was real. That wasn't like some one-time adjustment. So they really made a bunch of net income. Cash from operations exploded. So, I mean, that's a solid quarter. If they can keep that up, I mean, that'd be great. I mean, they were expected to lose net income and they made a bunch of net income. So I can see kind of why they've rallied up. Surprised they're not up more actually. But do you invest in any high growth ETFs? QQQM. So a lot of people know QQQ, but I actually recommend if you're just going to buy and hold it for the long run, actually buy QQQM. It's the exact same ETF. It's the literally exact same ETF, exact same holdings, exact same NASDAQ 100 strategy, but with the lower expense ratio. They don't market it because they don't want you to know about it. Someone said, yeah, can you show your Roth IRA? So yeah, here's my Roth IRA, by the way. It's not much, and it's $1,500. We're up 14% all time in here. We started it just over a year ago, but yeah, it's pretty not great right now, but these are all the stocks that I own in here. And here's my total percent change on every stock. So We also here's my main taxable account, by the way, dividend growth portfolio. Most of the stocks I own in here are just nice. They're all dividend paying companies, but yeah. Rolls-Royce stock. Yeah, so RYCEY. Rolls-Royce has actually been performing very well. Look at that. They're nearing an all-time high right now. They also just started paying dividends again because they're making so much money. A lot of people know Rolls-Royce for like the cars that they make, but this is actually an aerospace and defense company. Look at this. Half the revenue comes from aerospace. They make jet engines. Defense is 24%, power systems. And look at the money they're making. So actually, that's not in US. Yeah, so we're going to switch. So this is not an American company, but we'll switch their revenue to US dollars. But for the first half of this fiscal year 2025, they made $6 billion of net income. Geez, and now, so look at this right here. They always used to have more liabilities than they had assets, and now they have more assets than liabilities. This is great news. The cash flow numbers are incredible. Yeah, man, Rolls-Royce, they deserve the crazy stock price appreciation. Can you share some dividend stocks on your watch list that you don't own? It depends. Like, are you talking about higher yielding ones? I don't really have a specific watch list for that. Is it a good time to buy Amazon? I think so. Yeah, Amazon did dip. I do own them. Their AWS business had a little bit of slowing growth. They're already the number one market share, and they're doing like 120 billion a year. So it's kind of tough to grow it more. But they beat like crazy on all the financials. I mean, they beat like crazy on EPS, which is net income, crazy on EBIT. But I also think another reason Amazon has fallen so much is because of this free cash flow. So this is a Mag 7 company, and the free cash flow was negative 8 billion last quarter, and it was only 300 mil this quarter. So that was a uh, probably not great, but it's because why is the free cash flow negative? If you go to the cash from investing activities, this is why actually I love Amazon more than like a lot of other Mag 7s because they're so innovative. They literally spent $40 billion just this quarter. But investing in the company. They either bought another company, invested in infrastructure, investing money for a good, return. So they spent 40 billion this quarter. They have satellites. They own so much stuff. They're an ETF and one. They own Twitch. So yeah. Hey, try not to spam here. Hold on there. Let me fix that. So let's see here. I'm gonna sell my XRP. What up? Yo, what up, big mans? Ferris said United Health. Yeah, dude. So United Healthcare, RIP this company. I think they fell even more. So yeah, look at this. So after falling 50%, I mean, they're slowly bleeding out even more. So they did report earnings and they did show some margin compression. So I do think this PE is actually pretty fair. So the PE is right what it should be. So I think that it's actually fairly, if not undervalued, right here. Again, not financial advice here, but I don't own this one. But they're trading at a 9.9 PE. And here was the earnings. So they missed on net income and EBITDA. Because if we go to the revenue grew 12% year over year, but the net income fell 19. That's really bad. But we kind of expected this. We obviously, the government doesn't want these Medicare, Medicaid providers like making so much margin. Yeah, look at that. The margin fell 30% year over year. So that's why UNH is bleeding out a little more. But they're the industry leader. I think they'll probably come back from this eventually. So I think it's worth a nibble here, a small position, nothing meaningful, but because I could keep on going down. One of the best financial, hey, giver takers, appreciate you, man. Hey, yeah, I sell nothing. I don't have a course, book, Discord. I'm just on here giving my opinion, and I just like sharing my portfolio. So what's the most undervalued play in the market right now? Hey, that's a good question, Aaron. I don't know. But here's some of the stocks here's my most recent purchases, by the way. It's Progressive, Power Solutions, and I'm down 4.5% on Progressive. Power Solutions, this was a pretty decent one. And T-Mobile, I think T-Mobile's at a pretty good price right now. That blue line there is my average, so pretty close to my cost basis. But let's see. Oh, Nvidia, Open Door. Yeah, and Open Door, man, that's not one you want to hold. You want to like swing that one or something. But here's Nvidia, dude. This is a great company. So here's the thing with NVIDIA. I mean, we can see their GPU market share. They have a 20% GPU market share. Obviously, we know they're big in GPUs. But did anyone see Lucid like go up a bunch? Lucid produced a bunch of cars, autonomous driving cars that are actually powered by Nvidia's automotive software. So if you don't know Nvidia, this is a very small portion of their business, but it's cool to see the metrics. They're kind of competing with Tesla in the software business, but the automotive revenue is jumping on Nvidia, and obviously the data center revenue is huge. I mean, 30 billion of data center revenue, but honestly, the only thing we really need to look at here is the bottom line. I mean, they're printing money. I mean, Nvidia is making 15 to 20 billion in net income a quarter, and it keeps on growing. So, with this growth rate, what's it going to be this time next year? Also, same with the cash flow. I mean, the cash flow grew 80% year over year. All the Mag 7 spending, like at Amazon, Google, Meta, all the huge CapEx right now is just going to Nvidia. So, oh, by the way, we got to look at Meta. Hold on. I saw that one earlier and never got to it. Meta had outstanding earnings, and I do own that one, by the way, here in my Robinhood account. So we got 5 shares of Meta. Obviously, they own Instagram, Facebook, WhatsApp, and what's that new app called? Threads. Threads is now nearing the same amount of daily active users as X, which is crazy. And they're just the original founder of WhatsApp said no ads, no games, no gimmicks was their slogan. Well, here Meta just announced they're going to introduce ads to WhatsApp. So at the end of the day, they got to do what's right for the shareholders, and it's going to be instantly accretive to their. This is just an earnings tailwind. Great news. The PE is still pretty fair for a Meta. Mag 7 company, a 27 PE, which is just the net income multiple. I mean, that seems pretty fair. We can see their active users. They have 3.43 billion daily active users. I mean, pretty crazy. And just the net income is nuts here. I mean, making the same amount of net income as Amazon. So, and a lower valuation. But yeah, look at that. They're making like 20 bill a quarter, close to that. What app is this you're on? Hey, Turtle, this is actually a brokerage that I'm on right now. If you want to get this brokerage, it's in the link tree in my bio, very first link there. It's an affiliate link. So yeah, also, if we go to the cash from investing activity, Meta just bought half of Scale AI, bought a 3% stake in Ray-Ban's parent company. So I just love Meta. So I won't spend too much time on them. We all know about them. So let's keep going here. MUSA, you're welcome. So I guess let's check that one out. Murphy USA. So dang, look at that. It looks like the stock really gapped down on some earnings. So I guess we'll go find out what the earnings were, see if it's justified. So they missed a good chunk on revenue. 170 million miss on revenue, but they did beat on net income. Let's see if that was real. So it was. Okay, so here's kind of the bad news with this company. If you're wondering kind of why is this stock falling so much, if we kind of just look at the revenue, the lifeblood of the company, it's just not growing. It's down 9% or 8.2% year over year. Net income did grow 0.5%, which is actually pretty good. So they're actually holding their margin strong. But I mean, they leveraged up a little bit too. So it's tough. I can see why they're kind of falling. I want to see the growth really come back to that company. Char said AUR stock, please. So I think this is the company that has a huge partnership with, I think it's Uber. I forget, or maybe it's Palantir. You know what? I guess we'll go check because they own a lot of the company. So yeah, if we go to the company shareholders, okay, it is Uber. So look at that. Uber is the largest shareholder. Uber owns 18.5% of the company. So Uber is the largest shareholder of this, so it must be something. They have a really good balance sheet, no debt, lots of cash. But the only thing you got to be careful with is that this is still a revenue-less company. So that's why I'm going to stay away from this one. I'd rather buy Uber, to be honest with you, just because the revenue is 1 million in the most recent quarter. They lost 2. So this is a company losing 200 mil a quarter with 1 million of revenue. So we want to see some revenue, but it's good to know that Uber is investing in them. So that's kind of like they're backed by Uber. So hey, what up, Bablu? It's actually, I'm on a brokerage here. It's called Moomoo. If you want to get it, should be the link in the bio there. First link. It's an affiliate link too, so I appreciate that. But all right, it's actually a brokerage. But let's see here. Let's see. MP stock, please. Yo, what up, Pelican? So MP, let's see. Oh, we got to look at Sezzle too. And Scarletta. Hey, what up? Appreciate you. Hope you guys are having a good Saturday. So who is Sezzle? Yeah, Sezzle is one of my favorite stocks to buy in the market right now. So I do want to cover them after this. And APLD, fun clips. We got to look at APLD too. So here's MP Materials. This company basically got a huge partnership with the literal U.S. government. We want to open these rare earth mineral mines, and MP Materials found this mine this one singular mine will provide like 80% of the rare earth minerals we need will supply the U.S. for the next 25 years. So this is you're really going to see the future growth here with that one. But I do think they might be a bit overvalued right now, but that's why they're going up so much. So, who is Sezzle? So SEZL. So this is a company I love. Oh yeah, APLD too. We gotta look at that one. So Sezzle, here's what I love about this company. It's in my opinion, like the perfect buy and hold forever kind of growthy stock. I mean, look at the revenue. First off, the revenue is up 123% year over year. So incredible revenue growth, but look at the net income. So the revenue was only 104 mil of revenue, and 36 million of that is net income. So if we go to the margins here, they have ridiculous net margins. 35% net margin in the most recent quarter. I mean, incredible. So I love the net income growth here. Just the growth of the company. Revenue's up 100, net income's up 3x, cash flow's up quite crazy. So anyway, Sezzle, they're a fintech. They look like a good buy and hold stock. So APLD is actually a stock owned by Nvidia. So if we go to Nvidia's portfolio right here, we can see them, what they own. And one of their holdings is APLD. It's 3.5% of their portfolio. And APLD just had a huge partnership with CoreWeave. So that's pretty cool. So APLD, CoreWeave go into a partnership, and this is a data center hosting business, but a lot of the growth recently has come from their cloud service. So their cloud service provider, and look at the growth here. I mean, this is what you love to see. This revenue is up 220% from the previous year. I mean, at this growth rate, what's it going to be this time next year? Last quarter, it was up 522%. So incredible growth on APLD. Let's see. They did miss on some metrics. So, the revenue went negative. I don't think that's true. Yeah. Oh well, that looks weird. Okay, APLD. Anyway, I do like that one. Nvidia does own them. So, yo, Thermo said AMD. Yo, we just looked at AMD. Give me a couple minutes and we'll relook at that one. Yo, what up, Duran and unboxing? How's it going? Hope you're having a good Saturday. So let's see. There was another stock that someone said. Can you check out Amazon? Yo, that one, dude. What's up, man? Yeah. So, Amazon, I'll be really quick about this one since we already covered them, but they just fell on earnings 8.3%. I think it was because of the slowing AWS business. All their metrics were really good. Revenue's up 13, really good. Net income's up 34. So they checked all my boxes. But the thing that people don't like was this huge CapEx number. They invested 40 billion back into the company. That's a huge investment they did just this quarter, and they have just really high CapEx numbers. So yeah, literally hit my 2-month target in one day. August is gonna be lit. Yo, what up, X? That's awesome, man. So that's good to see. So Palantir as well. Yeah, we can look at Palantir. Oh, and CoreWeave. Yeah, hey, CoreWeave, another stock owned by Nvidia. Huge Nvidia position by them. Yo, RC World. Sorry, I didn't see that. Thanks so much for the rose, dude. I appreciate that. So yeah, Palantir is at an all-time high. I do think the valuation is pretty high. We look at the price to sales. So we're not doing a price to net income, just price to revenue. They're trading at 120 times price to sales. So first off, this company need to double their sales for this to get somewhat even reasonable. But here's why they have a high valuation, though. A lot of the revenue comes from the government. A lot of police stations use it. The government revenue is up 45%, really good. Also, they're making net income every quarter. Fortress of a balance sheet, no debt, so and lots of cash earning interest. So yeah, Palantir is good. So CoreWeave, this company, they just acquired CoreZ. So this company is like a little bit of their business is Bitcoin now. So they do got some Bitcoin. But check this out. This is the one thing we can look at because they literally just IPO'd. There's not too much data for us to look at, but we can see, look at this incredible revenue growth. It went from 188 million to 981 million. So incredible revenue growth. This is just such a growthy company. And they just acquired CoreZ. So that'll be interesting. And of course, if we go back to NVIDIA's portfolio right here, their CoreWeave is a huge position for them. So yeah. Nvidia bought the dip on them. Hey, yeah, we can look at SoFi too. Man, SoFi had incredible earnings. Like, I'm surprised they're not up more. I mean, SoFi had really good earnings. They're such an innovative company. I mean, we all know SoFi. They're like a fintech. And I want to pull up the revenue for you. So yeah, half the revenue comes from their lending business, the student loans and all that. But the real growth driver has been the financial services. I mean, if you click this right here, the revenue's up 101% year over year. I mean, the business has literally doubled. I mean, that's incredible on SoFi. Also, the net income right here. I mean, they made 100 mil of net income just this quarter. I mean, that's really impressive. So people are really starting to take SoFi serious as a fintech. So yeah, super growthy. Revenue's up 42. That's the highest growth I've seen in a long time. So yeah, I'm feeling SoFi. I want to buy more of that stock. So yeah. Justin said, thoughts on NRC. We could look at HHH. I want to get to all these. So sorry if I don't get to your stock. I want to get to all this. So yeah, I feel bad if you own this one. This is a $290 million company and looks like the stock's at an all-time low. So not great. Yeah, so net income just went negative. Revenue's down 3. So it's just not a growthy company. Revenue's not growing. Net income just collapsed. So I can kind of see why that one's kind of fallen. What's this app, gang? Yeah, hey, this is actually a brokerage right here that I'm on. So if you want to get this brokerage I'm on, go to the link tree in my bio. It's the very first link there. It's also an affiliate link. So we'll both get some stocks. But anyway, or you can just type it in. It's called Moomoo. But anyway, link tree in bio, first link there. I love this app for all the analysis you can do. And yeah, I have my main holdings in here. Keep my cash in here. So yeah. Anyway, let's look at this next stock. What was it? HHH? What's this one? I don't know if I've heard of this company before. Oh, and someone was saying Figma. Did Figma IPO yet? I don't know. So I guess we can just look that up if they did. So Howard Hughes. Oh, this is the company that if anyone knows who Bill Ackman is, Bill Ackman wants to like buy out this company entirely. So if you go to shareholders right here, yeah. So if Bill Ackman owns Pershing Squared, and Pershing Squared already owns 47% of the stock. So there's looks like a high chance that Pershing Squared is going to just acquire the whole entire company, kind of Warren Buffett style, and it'll go under their ticker symbol. But we can kind of see their operating asset segments, master plan communities, and let's see how the net income's doing right here. Are they a profitable company? So yeah, they are. Look at that. They're making net income all in the past 4 quarters. Revenue's up 27%. They've seen some nice revenue growth and they're profitable. So hey, that's interesting. I wonder why the stock's not doing too good. Maybe it's the high interest rates. I lost the farm on NVO this week. Yo, no, Mikey, that's not good, man. How do you see the buy and hold portfolio? Yeah, hey, this is my buy and hold portfolio right here. So I guess if you want to see all my portfolios, by the way, are on my YouTube channel. I'm fully transparent. I'll show you every stock I own, how much I'm up and down on them, lifetime returns on every portfolio. So yeah, head to my YouTube channel, by the way. Best way to support me is to subscribe to my YouTube channel. I sell nothing. Only thing I'd appreciate if you subscribe to my YouTube channel. I'm streaming on there as well. And you can watch the stream from there. If you miss anything, you can replay it. So yeah, let's get back over here. So someone said lost the farm on NVO. So yeah, that sucks, man. This is the company that owns Ozempic. So if you've heard of that weight loss prescription before, this is the company that actually owns that. And if we go to where their revenue comes from, we can literally see 95% of the revenue comes from their obesity care products. So that's one thing you do got to know. And they're printing money. They had great earnings, but the guidance hurt them. They also said that their Ozempic patent expires in 2027, so not good. And that's most of their revenue. Like, look at this. First off, the numbers this quarter were incredible. $4 billion in net income just this quarter. You get a 3.33% dividend yield. Nice little yield there. And the PE is literally like, look at this. The PE is a 13. I mean, industry average is a 23. So, I mean, NVO, I think that one's worth a little nibble there. What app is this? Yeah, hey, sorry. Keep getting questions. The app is in the link tree in my bio, the first link there. I'm actually on a brokerage right now. It's called Moomoo. So yeah, link tree in bio, first link if you want to get it. So yeah, I can. Yeah, hey, it's also should be in the link in the YouTube description. There's the link tree. So let's see. Fubo could be interesting with the Disney lawsuit. Wait, I thought Disney owns a bunch. I thought Disney already owns most of Fubo. I haven't heard of that lawsuit. If you have any news on that, I would like to hear what that Disney lawsuit is, because I am a Disney shareholder, actually, by the way. I'll show you that right here. Check this out. I actually own 15 shares of Disney. We're up 36%. You know, this isn't a company I'd really recommend. They're really boring. They don't really outperform the market in the long run, but I do own them. So I am interested in that all that news. So NAGE stock. So hey, I hope this isn't a small cap. We don't really like to cover the micro caps. So yeah, this is a $700 million company. It's not super small, but let's see how they're doing. So $700 million company. Let's see revenue. Hey, so the revenue is 30 mil a quarter, and they made net income on that. No way, that's actually real money. So think about this. You're buying a company at a $700 million valuation, and you're buying a company that's now making a couple million of net income every quarter. So that one actually, there could be something there. I'll put it on the watch list. They seem to have a pretty decent balance sheet. They are a bioscience. I don't love that industry, but that it's actually not too shabby there. SoundHound AI. Yeah, hey, so Nvidia actually sold out of this company. Nvidia used to own them, but Nvidia no longer owns SoundHound AI. But I want to show you one thing. If you're a shareholder of SoundHound AI, there's only one thing you need to watch, and that is their subscription numbers. So here's their subscription service revenue, which is literally most of the revenue, 85%. Look at the growth here. I mean, this is why SoundHound, a lot of people like this one. Look at the subscription revenue growth. I mean, it literally went from a nothing burger, 650,000 to 25 million, up 585%. So incredible growth on the subscription revenue. So at this growth rate, up 585% year over year, what's it going to be this time next year? So that's the growthy part about them. Their royalties, though, this segment of their business has been kind of slipping down at like an all-time low, down 50% year over year. So, yeah, they also lose money every quarter. So there's some good news and bad news about this company. You're really just watching this subscription growth there. I think that one you probably want to swing trade more than just hold for the long run. If you had to pick one platform to hold, which would you? What I don't know what that means, Lamia. Oh, I'd probably pick Netflix or Google. Google, YouTube TV. Someone said Google. Yeah, we'll look at them too. So Google and YouTube TV now has more market share than Netflix on TVs. Or actually not market share, but in watch hours. There's now more watch hours on YouTube TV than there is on Netflix in just the YouTube TV business, not even like the other business. But anyway, I'll analyze Google real quick. I'll be quick about this one. I mean, look at the valuation. So first off, Google trades at a really fair 20 PE. So Mag 7 company trading at 20 times net income seems pretty fair to me. And if we look at the revenue was pretty good. It grew 13% year over year. So revenue's up 13, but look at the net income. It's actually up 19%. So that means they're growing their margins. They have a 30% net margin, incredible. So they're also an insane buyback play. So here, check this out. Actually, I'll just show you the numbers for yourself. All you got to do is go to the cash flow statement, and you ready to see how much they're spending on buybacks every quarter? They literally are spending. It's kind of the top here. 13 billion just in the most recent quarter buying back their own stock. This is why Google is such a shareholder friendly company. They're literally spending 15 billion every quarter buying back their own stock. And if we go to the dividends, they just started paying a $2.5 billion dividend. I mean, there's so much room for them to raise the dividend. If they're already returning 13 billion to you in buybacks, I mean, they're able to literally 5x their dividend right now. They just choose not to. Anyway, Google's such an innovative company. The fact that they don't have a super high dividend is why I like them. They can still reinvest in the company. And they own so many businesses. They own YouTube, Android, Waymo. They own quantum chips. So Waymo. So Google's so innovative. Anyway, understand for yeah. Hey, no, what up, unboxing? Good to see you. So ASML stock, yeah. So ASML had some mixed bag earnings. Hey, yeah, what up, Don? We can look at Apple too. I do want to look at them. So hold on here. ASML. There we go. So. This is, I think, a Netherlands company. Actually, I don't remember where they're headquartered, but yeah, they're in the EU. So we'll switch the revenue to USD just so it's easier to understand. They're trading at the lowest valuation they've traded at in a very long time. I mean, look at this. They're at the industry average, a 25 PE. Does ASML deserve an industry average PE? I don't know, but here's why the stock gapped down on earnings. They gave guidance for next year, and the guidance for next year was basically the exact same that it was for this year. So they're showing no growth for the company, which is unfortunate. I think that's why the stock fell. But this quarter's earnings were incredible. I mean, the revenue grew 35%, and the net income grew 86%. To 3.15 billion, a record net income. So here's what's weird. Company just had a record net profit quarter, record profits, and the stock is nowhere near all-time highs. Nvidia's at all-time highs, TSM's at all-time highs, but not ASML. And this is the chip making manufacturer. They're the chip making manufacturers for Nvidia, Samsung, and Intel. What app broker do you use to trade on? Or hey, this is a brokerage right here. It's in the link tree in my bio. The first link there, it's called Moomoo. So yeah, if you want to get this app I'm on, I love it for analysis too. Yeah. Hey, so let's look at Apple right here. So AAPL. What up, Don? So obviously, this is one of the biggest companies in the world. I'm on an Apple device right now. A lot of people are locked in the Apple ecosystem. I love my iPhone, but check this out. We can see their smartphone chip market share. Apple has a 19% smartphone market share. I think they make smartphone chips. So yeah, here's their smartphone chip market share. Obviously going to be roughly in line, but yeah, 17%. But anyway, the iPhone is like the best product they'll ever make. So the iPhone is half their revenue. But then they have this services business. So whenever you go buy something in the App Store, you go buy some gems on Clash of Clans. They take a 30% fee on that. So they have this high margin service fee. It's a 30% royalty. So you can spend $100, $30 of that in the App Store just literally goes back to Apple as a high margin royalty. So incredible services revenue. Then they have the Mac, the wearables like the watch and the AirPods, and then the iPad. So yeah, here's why Apple is also affected by tariffs, because did you know only 36% of the revenue comes from the US? I always thought it was more than that. So hey, that's kind of cool. If you buy Apple, even though they're headquartered in America, they're getting revenue from, 25% of the revenue just comes from EU. Everyone around the world loves the Apple products. So yeah, this is a perfect company, in my opinion, to just buy and hold forever. No real reason to sell out of them. Just hold them for the long run. You also get a nice little dividend. This is the company, they have the biggest buyback program in the world of any other stock. So go to cash flow statement here. We can see how much they're spending on buybacks, and Apple is literally spending 20 billion in net income every quarter buying back their own stock. So incredibly shareholder friendly company. And look, their dividend, of course, just like Google, they're only spending 4 billion on dividends a quarter, not even, and they're spending 20 billion, 25 billion a quarter on buybacks. They could 5x the dividend. Again, they choose not to. So I'm betting you in 5-10 years, you'll have like a 2 or 3% dividend. So if you buy Apple now, you're basically, you'll get in 10 years from now like a 5-10% dividend yield on cost. Again, not financial advice here. I'm just kind of throwing stuff out there. So QDog said the CSCO. I think that's Cisco. So this is the company, this was one of the huge .com bubble stocks, but they actually acquired Splunk. If anyone's heard of Splunk before, it's like a cybersecurity business. So that was an incredible acquisition Cisco just did. Makes me want to buy the stock actually, because they're at a pretty fair valuation, a 27 PE. See the revenue comes from networking, services, and security. So if we go to the security revenue, where did all this growth come from? Up 111% last quarter, came from the Splunk acquisition. So incredible growth in the security. I think Cisco has a lot of opportunities to also just acquire great companies, because if you go to the net income down here, they have a lot of money to play with. They're making 2.5 billion in net income a quarter. That did fall a bit, but they're not too growthy. That's the thing. So I want to see this company do some M&A again. So anyway, Cisco, they're interesting. What's the dividend on this company as well? Yeah, a 2.5% dividend on that company. So hey, not too shabby. Apple, I have way too many shares. Will they acquire it? I read about that, Don. Apple might acquire a company for AI, kind of like how Meta's doing. Meta acquired Scale AI. They're hiring like a super intelligence team. Oh yeah, someone said Fig. I forgot to look at that one. So look into Figma. Did this company already IPO? So here's the IPO. Look at that. So they IPO'd at $30 and now they're up to 122. Man, Robinhood was begging me to buy in this one, and I just I don't like to buy the IPOs, but we can see but there's not much revenue, or not much data because they just IPO'd, but we can see from 2024 Q1 to 2025 Q1, revenue grew 50%. So that's pretty good growth, pretty good balance sheet, only 28% liability ratio. So anyway, I'm curious to see how that one moves, and we can get some more data there. So, all right. So Gama said ARX. I haven't heard of this one, but we'll check it out. Accelerant Holdings. Does not want to load there. Hold on. Sorry about that. Yeah, hey, my Wi-Fi is bugging right now, but we're good. We're back. ARX. Okay, let's see. ARX stock, Accelerant Holdings. So this is another recent IPO. Look at that. So there isn't much data here. So let's go check them out at least. So underwriting, exchange services, managing general agents. So that sounds niche. Look at the revenue. It's up 40%. They made net income on that 178 mil. They made 7 million. So that's actually good news that they're profitable. So that's another one. I'd wait a little bit to see some more data there, but Yeah, hey, MP Materials, that's the rare earth mineral play. MP Materials is about to open up a mine with the government to uh, oh, here's a stock I don't want to do. But to supply the next like 40 years of rare earth minerals, just this one mine they want to open. But here's Boeing. This is actually a company I don't love. Like, if I'm going to buy and hold a stock for the long run, I don't think Boeing's going to be on my list just because the numbers aren't great here. And actually, this company has literally not had a single quarter of positive net income in over 2 years. So this company has literally, like, look at this. This is 2022 here. We're all the way back in 2022. They have not made a single dollar of net income in any quarter ever since then. And look, they're losing billions. So this is one I stay away from. They have more liabilities than they have assets. So anyway, Boeing's one I'd stay away from. I do know there was a bunch of orders from other countries ordering a bunch of Boeing planes, but man, they're in a lot of heat with the government as well. I mean, there was a recent lawsuit, Boeing overcharging the government by 300,000% for soap dispensers. I mean, there's so much shenanigans there. So I don't know if I trust Boeing. Also, RIP that one whistleblower. What's the difference between 2x leverage? Yeah, hey, so if like Nvidia goes up 1%, the 2x will go up 2%. Oh, Rocket Lab. Hey, yeah, Rocket Lab and Amazon. Yeah, Amazon just reported earnings. Meta had earnings. I haven't seen anyone talk about Microsoft, actually. Is Microsoft not popular? But anyway, we'll look at Rocket Lab too. So this is a company that deserves, I think, this huge stock price appreciation, this high multiple. I think they deserve it because they're so growthy. It's my favorite space stock. I wouldn't own ASTS, Space Mobile. I wouldn't own Lunar. I would own Rocket Lab because of the growth here. So if we go to their space systems revenue, which is 71% of the business. I mean, look at the growth here. I mean, it's up 45% year over year, literally to a new record. I mean, this is the kind of stock I want to buy and hold for the long run. They also just acquired a company for 500 mil, another space company, and they also have backlog of orders of over 1.5 billion. So they have a $1.5 billion backlog of orders. So their product is in demand. Airbus is the future for planes. Yeah, hey, I wonder if there's any ticker symbols. But I don't love the airline industry. That's not a stock or I don't love any airline stocks right now. Not an industry that really outperforms. So here's Amazon right here. I'll be quick about this one because we covered them a few times. So here's Amazon. I love their earnings. The net income was great. The sales were up double digits. I wasn't expecting that. 13% revenue growth, really good. Net income's up 34, so that means they're growing their net margin. Look at this. I mean, they now have a 10% plus net margin, double-digit margin. It used to be a tough business, single-digit margin. It's really the best part about Amazon is this margin expansion. But I think the things investors don't like was this huge CapEx number. Amazon invested 40 billion just this quarter, like investing in, Nvidia GPUs or new companies building out their infrastructure. So that's the things investors didn't like. So if we go to the FCF, which is the free cash flow, for a Mag 7 company, this is kind of odd. Last quarter they lost 8 billion. There's only 300 mil this quarter. So this kind of first half of 2025, the free cash flow is nothing. But that's also, some investors like that. And I actually like that. That means they're investing a bunch into the company. I'm glad they don't pay a dividend. What platform is this? Yo, hey, Izzy, this is actually a brokerage right here. It's in the link tree in my bio, very first link there. It's called Moomoo, actually. First link there. I mean, Amazon down 8%. Why was the market? Yeah, hey, man, Amazon. Yeah, there's more. And the AWS business. I think the AWS business at Amazon slowed down. I mean, it is a small portion of their revenue, but it's the highest margin segment. If we go to their AWS, Amazon Web Services, it's kind of hard to grow this number, first off. But for the full year 2024, it was 107 billion. So incredible. The growth is slowing, and they actually lost they lost their market share by 2%. Their AWS market share, 1% went to the Google Cloud and 1% went to Microsoft Azure. So they lost their market share by 2% actually, which I buy the dip opportunity in my opinion. So Baruch, or sorry if I'm saying your name wrong. You said Supermicro. So yeah, Supermicro's been crushing it. They're one of my holdings in here. I do have 10 shares of Supermicro Computer. I bought them when they were in this accounting shenanigans. They didn't report earnings for, like, look right here. Here's one earnings report. The next earnings report wasn't for literally like 8 months later. Like they had some issues, but Supermicro's back. One of the reasons they gapped up right here, like this wasn't from earnings, but this huge gap up right here, they had a $10 billion deal with DataVolt, and this is a $33 billion company. So the great news but again, I wouldn't buy that one here. It's definitely not at the best valuation to buy an app, but I do own them. Where do you learn to? And hey, most people say like, how did you learn? And most people be like, hey, go buy my course. I sell nothing. I don't have a course book, Discord, WhatsApp, Telegram. But yeah, if you want to learn more, go to my YouTube channel. But I just read books. I've watched YouTube videos, articles, and stuff like that. And I've been doing this for a long time. Yo, someone said, where is this? Yo, what up, Mehmed? Yeah, man, I love Amazon. Google and Microsoft are growing fine though. Yeah, I like. Oh, someone said Coca-Cola. Let me get back to Coca-Cola here in a second. I like PRIM. What is PRIM? I saw that one a few times. So hey, PRIM stock. Look at this one. It's at an all-time high right now. So hey, congrats if you own that one. Yeah, we'll look at Coca-Cola after this. So here's Primaris Services. So a $5 billion company. Let's go check out the financials here. So they're an energy and utility company. So hey, that's a hot sector right now. And they're beating like crazy. Like look at the orange line. You know, the analysts were only expecting 1.5 billion in revenue. Well, they made 1.64 billion. And look at this huge EPS beat. I mean, crazy beat on the net income. So I can actually see why this stock is doing so good. I mean, wow, look at this net income year-over-year growth rates. I mean, incredible numbers on Prim. So I see why that one's doing so good actually. What did you buy in the last dip? I bought Progressive Corp, ticker symbol PGR, and I'm down on Progressive. Also, another company I've been buying the dip on like crazy is ticker symbol COKE. This is Coca-Cola Consolidated. As you can see, I own 22 shares of this stock right here. So I do own this one. And you can see every time I buy the stock, you can kind of see I bought a share of them yesterday. So this is the stock I've been loading the boat on. Yo, no way, Techno Viking. Thanks so much for the rose there, man. I appreciate that. If you got a stock you want me to look at, let me know. I'll check it out for you. Oh, he said thanks is hard to find honest people. Hey, yeah, thanks, Techno, man. Yeah, I'm just on here to give my opinion. I sell nothing. I don't have a course book, Discord. Only thing I have is a YouTube channel. So if you want to support me, best way to support me is just go subscribe to the YouTube channel, stream it on there as well. If you miss anything, you can watch it on the replay. But here's my most company. As you can see, all these buy orders. I've been dollar cost averaging into Coca-Cola Consolidated. Here's one thing that I think is really cool. So look at this dividend yield versus payout ratio. So first off, and kind of you have to remember this. So they have a 0.7% dividend yield and only a 5% payout ratio. So let me go pull up Apple real quick. So remember that a 0.7% dividend and a 5% payout ratio. So here's Apple. Apple has a 0.5% dividend and they have 3x the payout ratio, a 16% payout ratio. So Coca-Cola Consolidated is a really nice company. They're the bottler for a lot of Coca-Cola products. I've actually met the CEO. He's a really cool guy. The CEO owns 70% of the voting rights of this company. And so yeah, they're making a lot of net income every quarter. So I really like that one actually. I may start by, yo, spread the wealth. Good to see you, dude. Yeah, Coca-Cola Consolidated is one I've been dollar cost averaging into. Also, be careful dollar cost averaging. Like here's a stock, for example, look at this one. I was dollar cost averaging into this stock right here. I slowly bought into that. Like I recommend if you want to buy a stock, don't spend all your money at once buying into them. Slowly buy into them. It's kind of a more like patient, disciplined approach. But also because you do that, it won't always save you. Like look at this stock right here. I'm down bad on them. So always do your own research. Nothing in this is financial advice. Sir, app name. Yeah, hey, update. If you want to get this app I'm on, it's actually a brokerage. It's in the link tree in my bio there, the very first link. So it should be in the description too. But let's keep going here. Let's see more stocks. Rick said APLD. Yeah, no problem, Kenneth. For your Roth IRA, do you invest in smaller market caps instead of the Mag 7? Yeah, so actually, real quick on my Roth IRA, here it is right here. I've switched on my strategy. I'm trying to find like growthier companies, like kind of some riskier plays like an InnoData, a GHM, a TSSI. Also, my most recent purchase is actually CubeSmart. I bought 2 shares of them on Friday. I got back into them. Fagello's here. I got back into CubeSmart stock. So anyway, oh yeah, Microsoft. Let's go. Someone said Microsoft. They also just reported earnings. Dude, did anyone see the Meta earnings? Man, Meta had incredible earnings. Yo, what up, Corey Potter? Yo, he's really good investor. So anyway, here's Microsoft right here. Microsoft, look at this weird candle. I mean, they gapped up and then they kind of lost some of it, but they had really good earnings. Like if we go to the revenue right here, I mean, I don't know how they pulled this off. This is a huge beat for revenue. They beat like crazy on revenue, beat like crazy on EPS and EBIT, which is just EBITDA. So yeah, net income is literally over 25 billion in net income every quarter. Microsoft has a better credit rating than the US government. I mean, this is as safe as it gets. You also get a 0.6% dividend yield, great dividend growth company. Microsoft also does crazy buybacks. I mean, look at this. Here's the cloud business that is growing like crazy. They have three main revenue streams, and look at their intelligent cloud business, their Azure cloud. I mean, you can kind of see the growth here. It's over 100 billion of annual revenue for them now. And also check out the buybacks Microsoft does. I think they do a lot. Let me see here. So so there's been like 4 billion of net income a quarter buying back their own stock. Still shareholder friendly. I do like them, but it is tough for them to buy back their own stock at all-time highs. Hey, what up, X? Hey, yeah, hit the like button if y'all want to help me out. Yeah, I'd appreciate that. Professor Pumpkin said CACI. So, a $10 billion company. I've actually never heard of this stock before. So let's go check them out. No dividend on this company. I wonder what sector they're in. So here's the revenue. The revenue's up 11 and the net income is down 3% year over year. So that does mean their margins did fall a bit. So maybe that's why the stock's kind of been flat for a while. I don't know. Maybe they're just a slow growing company. I don't know what industry this is in. Let's see. Information technology. Huh. I got to do more research on that one, but hey. All right, let's see. NVO. Hey, try not to spam here. We just looked at NVO, man. Basically, this is the company. I'll be quick. This is the company that owns Ozempic. They had good earnings, but bad guidance. The patent for Ozempic expires in 3 years, which isn't good. I do like the risk to reward. I do think it might be worth a nibble. Not a huge position, not a meaningful position, but 3.3% dividend yield here. The PE is dog cheap. I mean, the PE is just the net income multiple. I mean, they're trading at a 13 PE. The industry average is a 23. So, really low valuation, and they're still growing. Obviously, the net income or the PE collapse is because the future is uncertain. That's what that is kind of that's the story that it's telling there. The PE is collapsing, so the future growth is probably going to go down. But for right now, the earnings are incredible. I mean, they're making over 4 billion of net income a quarter, 3.3% dividend yield. But yeah. Do you think it's better to buy into good earnings or bad earnings? Probably good earnings, right? Meta had incredible earnings, dude, man. I want to go over Meta again if someone wants to hear that. But all right, let's see here. Someone said ARX. I think I already looked at that stock. ARX. Oh yeah, we already looked at that one. Hey, yeah, they just IPO'd. Yeah, if you miss anything, you can watch it on the YouTube replay. We literally just looked at that one 5 minutes ago. So MRK stock. So Merck, hey, this is the healthcare company. I remember they were making the Merck red pill. But ever since COVID, yeah, this stock has just not been performing too well. Let's see dividends. You still get a nice yield here. Check that out. It's like a dividend play. 4% dividend yield on Merck. Not too shabby. And if we go to the net income, yeah, look at that. They're making this actually is really interesting. I didn't think it'd be this good. They're still making 4 or 5 billion of net income every quarter. So I mean, this might be why the stock's fallen. The revenue's down 1.9%. So they're not growing. Revenue's down, and the net income fell 19%. So the margins fell a bit. But still, this is incredible net income that they're making. So it might be worth it to buy the dip on. Out of all the stocks to buy the dip on that has like a high yield, that might be one of the better ones. So, PayPal stock. Yeah, hey. So PayPal actually had some decently impressive earnings. For what they are. So they did fall though. So here I will give you my analysis on them. I love the buybacks that they're doing. This is such a shareholder friendly company. They've bought back 7% of all the shares in the past year. They're trading at like a commodity multiple of 14. Like they're not really expected to make or lose you any value. But yeah, if we go to the revenue right here, the revenue, this is the part that I'm kind of happy with. Sorry, my Wi-Fi doesn't want to load this right here. Revenue. Please. So there we go. The revenue grew 5%. I mean, still not great, but like mid-single digit 5%. That's all right versus the 1% last quarter. So 5% revenue growth and the net income's up 11. So they grew their margins a little bit. But look at this. They make just over 1 billion of net income a quarter. They don't pay a dividend. So what is PayPal doing with $1 billion a quarter? Well, if we go to their stock buybacks, they're literally spending 1.5 billion of net income, like buying back their own stock every quarter. So PayPal is such a shareholder friendly company. And so they've bought back 8% of the stock in the past year. So yeah, the $64 billion company bought back you should get a good 8% total shareholder return a year there. I'd like that one to buy and hold for the long run. So yeah, Leet, what's up? Leet said, what is this one? ACIW, huh? Yeah, so we'll check this one out. I've never heard of this company before. And hey, yeah, if y'all want to hit the follow button, we go live every day. We just look at stocks and stuff. I don't sell nothing, no course, book, just on here, give my opinion. So And best way to support me, subscribe to the YouTube channel and watch the stream from there. YouTube channel is called Nathan Robert. It's also in the link tree in bio. But anyway, here's ACI Worldwide, a $4.2 billion company, and the PE is a 16. So that's a very fair PE, actually. Payment software and billers. How's the billers revenue doing? It grew 10%. Not too shabby. What about the payment software? I guess it doesn't want to load it quarterly. They just started, Anyway, let's see. The revenue's up 25, and look at this net income. I do like this. This is a huge improvement from the previous year. Yeah, look at that. The previous year was kind of choppy, but look at that. They're making like 50 million, actually more like 60 million of net income every quarter. So they're very profitable right now. That's probably why I don't know why the PE is so low. I mean, the PE is a literal 16, like the lowest it's ever been. I mean, look at that. So, I don't know. I got to do more research on them. At first glance, they seem pretty good. Let's see. UPS stock. Hey, this is another kind of dividend play. Oh, we got to look at Grab Holdings too. Would you rather invest in Microsoft instead of something like NVO? I personally would. NVO might be worth a nibble here. Not a huge position, but it might be worth a nibble. So here's UPS, United Parcel Services. Not too good earnings. So yeah, as you can kind of see by the gap down, they gap down and then bled for another 3 days. So that's why it's not always good to instantly buy the dip. You know, sometimes like there's like a 3-day rule. You wait for wait for investors to really digest the earnings. And for them, it wasn't too good. Well, actually, they met all expectations. I think the guidance was bad. I didn't look into it, but here's kind of the bad news. I mean, the revenue's down 2%, so they're not growing. The revenue's down 2.7, and the net income is down 9% year over year. So that means their margins did fall a bit, just a 6% net margin. And I actually think their dividend might be at risk here. So they have a 96% payout ratio, a huge yield. I mean, they don't need this high of a yield, a 7.7% yield. So I do think there might be some risk there, but that's mainly like a dividend play right now. Oh, what up? Granny said IBM. Please look at IBM earnings. So yeah, hey, IBM, let's check them out. So yeah, dang, look at that. They had a nasty little gap down there. So let's see what their earnings were. First off, I like them for the dividend. So if you buy IBM right now, you get a 2.7% dividend. So a pretty good dividend, but the payout ratio says 103%. So let me see if that's real. So if we go to net income versus, okay, so they had 1 quarter there. That's really messing up their payout ratio. But yeah, usually they're making they're making like if you average it out, like 2 billion of net income a quarter. So their actual earnings, though, they triple beat. So they beat on every metric. So I do wonder why IBM fell so much. I don't know. Maybe it's because they already have a kind of high multiple. Again, it's kind of artificially suppressed from this one of net income quarter. But yeah, I don't know. I got to do more research on them. I think everything looked pretty all right there. Maybe just didn't. Maybe the guidance wasn't good. Thanks. Yeah. Hey, no problem unboxing. What do you think of Crypto Zora? I've never heard of that. Do you like ACMR? What's ACMR? Let's check it out. ACM Research. They're on my watch list, actually. So if they're on my watch list, I must like them for some reason. I don't actually remember going over this company. So let's see what impressed me in the past. So they're a $2 billion company. So pretty fair market cap, $2 billion. Let's see. Single wafer cleaning. Yeah. So that's interesting, actually. The revenue's up 19%. Let's see. So revenue is up 13. And look at this net income. So wafer cleaning chips company makes, couple mil, over 100 mil a year of net income. So I do like this net income. Really good balance sheet as well. Cash from operations is good as well. So actually ACMR seems interesting. Electrochemical plating. What app is this? Yo, hey, Maddie, this is actually a brokerage right here if you want to get this app that I'm on. It's in the link tree in my bio, very first link there. Yeah, I love doing analysis on here. So Cohen said PANW. Yeah, another thing you can kind of see on here are like super investors' portfolios and stuff. And Nancy Pelosi owns that company. Yeah, these super investors literally have to by law, SEC law, reveal all their holdings to the public. So Nancy Pelosi owns Amazon, Google, Salesforce, but one of her main cybersecurity stocks is PANW, Palo Alto Networks, and I really would like to get exposure to this stock. I want to get in the cybersecurity industry. I don't really have much exposure right now. And look at this. This is what I love about this company. 55% of the revenue comes from their subscription business. And look at how just this hits a new record every quarter. I mean, if we look at this on an annual basis, I mean, it's literally at 4.2 billion, hits a new record every year. And this is all reoccurring revenue. So incredible growth on the subscription revenue. Love that for PanW. And they're making net income every quarter. They're making FCF, free cash flow every quarter, a lot of free cash flow, 3 bill a year. So anyway, they're your main cybersecurity play. I think they have one of the largest market shares. So do you only look at financials or do you take anything else? I do sometimes take some other stuff into account there. Ryan said, what happened? Hey. What up, Ryan? Yeah, it should be in the link tree there. The very first link in the link tree in my bio if you want to get the app I'm on. Should be in the link in the description. So someone said, boss, market expects something will move in the right direction, have earnings flat on. Yeah, Spread. What's up, Spread the Wealth? Boss said HCTI. So this is the company. Yeah, hey, we don't really cover these kind of stocks. So look at the top right. This is market cap. This is how much the whole company's worth. This company is worth $7 million. So we're not going to really cover this kind of company. You could buy the whole company for $7 million. So that one's not one you'd want to buy and hold for the long run. But someone said JEPQ, monthly dividend. Yeah, hey, so what up, dude? So lost in the sauce. So this is JEPQ. They're a covered call ETF for the NASDAQ. So if we go to the dividend, most people like them for this huge dividend. So all the premiums that they collect from selling calls on the NASDAQ, they pay out in a dividend. So you get a monthly payment, you get a monthly dividend, and it's an 11.5% yield. Here's the thing. You're not going to outperform the QQQ in the long run, but because look at that. The QQQ is at an all-time high. We're pretty close to it. This one's not at all-time highs because of the covered call strategy. So, but you basically buy that to maximize your dividend income. So, yep. Is Moomoo better than Robinhood and Webull? I think so, JC. Yeah, JC. If you go to my YouTube channel, my previous videos, I compare all three of the apps. I have all three of those, by the way. Hey, I forgot to mention that. Look, I have a Webull account. I have a Robinhood account as well. I got my Roth IRA in here, my main taxable account, but my favorite app for analysis and everything, best free app, lowest fees would be this one right here, Moomoo. So yeah, again, if you want to, with my affiliate link, you can just type it in. But if you want to get this brokerage right here, it's in the link tree in my bio, very first link there. So let's keep going. UnitedHealthcare, dude, RIP UnitedHealth. So yeah, let's go do some analysis on UnitedHealthcare. First off, RIP the stock. I mean, look at that. They just keep bleeding lower. And I think it's actually worth nibbling here. We'll look at GameStop too. Yeah. I definitely think UnitedHealth is worth a nibble here. Not a huge position, but a small position because they're trading at this 9.9 PE. I mean, that is super cheap. I mean, I think it's pretty much priced in that the net income is going to collapse. I think it might be priced in too much. So here's the earnings weren't good, obviously, but we expected that. So the revenue grew 13. Like, think about this logically. The revenue grew 13%. But the net income fell 20. So the margins kind of collapsed here. Margins fell 30%, your lowest margin like they've ever had. So again, the government doesn't want them making a lot of money. So we kind of expect that to go down. But they have a 3.5% dividend. I mean, wait, let me see. So in the most recent quarter, they made how much net income? 3.5 billion. So they made 3.5 billion in net income. And how much does the dividend cost? So the dividend cost $2 billion a quarter. So and look at that. They're spending a lot more on buybacks. $3 billion they spent on buybacks in the most recent quarter. So you probably own like 2% more of the company than you did a year ago. Oh, yeah. So here's GameStop. So this is kind of a meme company, but there's one thing that kind of separates GameStop from a lot of the other ones. It's that they're not going to go bankrupt. And here's why. So remember this number right here. The whole company is worth $9.9 billion. So the market cap is $9.9 billion. Okay. $9.9 billion market cap. And check out this balance sheet. Here's what I don't believe. This company has $6.4 billion of cash. Literally 60% of their market cap, 65% of the market cap is just their cash on hand. This company also has no debt whatsoever. Completely debt-free company with $6.4 billion in cash. And I bet you're wondering, how did GameStop get all this cash? Because if we go to the revenue right here, I mean, pretty awful fundamentals here. I mean, this is not a stock that you really want to own for the long run. They basically diluted the life out of you. They've issued so many shares, and it's actually the right thing for them to do. So go to the issuement retirement of stock. I mean, where is that? And they diluted you 400 million last quarter. Basically, they're diluting the shareholder a bunch to raise cash, which is the right thing to do. So basically, 60% of the market cap there is cash. Not the end of the world. Are there any plays related to GTA 6 coming out? Yeah, hey, Ryan, TTWO. So this is kind of the pure play here. This is the company that owns Rockstar Games. So if you've heard of GTA 5, Red Dead Redemption. They own that. And as we know, GTA 6 is about to come out. So they basically have this asset. This is a unique position to be in. Take-Two has this asset, GTA 6, that is going to, as soon as they release it, literally bring them in billions of dollars. I mean, they're going to sell skins, maps, DLCs, whatever, and I see like people love GTA 5. I've seen grown men, I see memes about it. They're like, hey, I'm a grown man. I don't care if GTA 6 costs $300. I'm paying that. So this one, they have kind of been slowly bleeding out here. So maybe you could find a position in this one. But basically, you're waiting for them to release GTA 6. It's going to be a huge catalyst for their earnings. It's just going to boom up their profits. So, yeah. Can you look at OKE stock? OKE. One OK, I think is what the company's called. So one OK stock. They've kind of been flat since 2020. So let's see what they do. Actually, I don't know if I've heard of this company. Oh, so they're an LNG company. So natural gas, refined crude, natural gas gathering. So this is good news though. Wow, look at this revenue. Whoa, 8 billion. So the revenue's up 69%. And look at this net income. I mean, they're making 700 million to a billion of net income every quarter. And you get a 5% dividend yield here. So again, you won't outperform the market just because it's commodity utilities related. But I mean, man, those financials are very strong. Safe dividend, high yield there. So, let's see. LRCX. Is that Lamb Research? Hey, I haven't looked at Lamb Research in a long time. So, hey, yo, Sparsh, I appreciate the kind words there. Really appreciate that. So, we can look at Nvidia too. What up, IDK? So here's Lamb Research. I think this company has a nice yield. So yeah, even if you buy this stock at a near all-time high, you still get a 1% dividend yield here. So pretty nice. And someone said, what platform? Yeah, hey, Martin, if you want to get this platform, this is a brokerage. It's in the link tree in my bio, first link there. It's called Moomoo. But wow, look at this this growth. This is why I love Lamb Research, actually. Look, the revenue's up 33. Net income is up 68%. So what's that mean again? It means they're growing their net margins. Wow, 33% net margin, up 26% year over year. Incredible earnings from Lamb Research. So, and the cash flow is up 200%. Man, I'm surprised Lamb Research isn't up more. Those were some strong earnings. So we can look at Nvidia too. I think Lamb Research is another chip play, kind of like Nvidia. So Nvidia is obviously the industry leader. They're pretty close to an all-time high. Obviously, we know they have a huge GPU market share. So check this out. NVIDIA has a 20% PC GPU market share, pretty good. Also, if anyone's seen the Lucid deal, Uber just ordered a bunch of cars from Lucid, and those Lucid cars actually use NVIDIA's automotive software for autonomous driving. So it kind of competes with Tesla, actually. But yeah, again, very small segment of revenue here, which is cool. Data centers, most of their business. Think about this. So many companies like Google, Meta, Amazon are buying NVIDIA chips for the data centers and stuff, but NVIDIA can just supply it themselves. They cut out the middleman. They don't need to go to anyone else. They get it at the cheapest price. So that's why they're a huge data center play. And if we basically go to the net income right here, bottom line here is they're making 20 billion of net income a quarter, or are going to be at this growth rate. I mean, incredible growth rate on the net income. They also just got permission again to send their chips to China, which is a huge earnings tailwind. Same for AMD. So that's a good buy and hold stock. So here's an aerospace and defense company that's actually been struggling recently. So this is Lockheed Martin, and look at this huge gap down. I think they deserve it, I think, which is sad to say because the earnings really weren't good. So here's what they do, first of all, aerospace and defense company. I mean, I love how diversified that they are. Aeronautics, mission systems, missiles, space. So I love how diversified that they are. But look at this net income. They used to be really consistent, 1.8, 1.5 billion a quarter. But recently they've really been struggling. Look at that. It fell 80% year over year to just 300 mil. And that wasn't like some one-time adjustment. That was real. So look at the cash flow, fell 90%. Yikes. So actually I can see why Lockheed Martin's fallen. They also have a nice dividend, though. You get a nice dividend and buybacks with that company. They spend a lot on buybacks a quarter. So, let's see. Thank you for checking out GameStop. Look at AMC. Yo, AMC. I don't actually want to. AMC is nowhere near as good as GameStop, and GameStop isn't even good. GameStop is just 65% cash value for their market cap. AMC isn't anywhere near that. But here's a company I love, and I think Taiwan Semi is literally a $250 stock or plus. I'm surprised that Taiwan Semi isn't at 250. First off, look at this valuation. Here's why I think that. The PE is a 25, and that's not expensive. That's not a ridiculously expensive PE. So I believe this company has the ability to stretch up their valuation to a 27. a 28 PE. I think that would be pretty fair. I mean, first off, look at this market share. I mean, they literally have a 67% market share for those 5 nanometer wafer chips, which is huge. And look at this net income. This is the best part. Oh, let me switch the revenue to US dollars. So this is in US dollars. They made 14 billion of after-tax net income just in the most recent quarter, up 79%. I mean, incredible earnings. I almost don't believe it. Revenue's up 54, net income's up 80. So they're also growing their net margins. A $1 trillion company with 43% net margins. So anyway, Taiwan Semi is a money printer. Same with cash flow down here. So even if you buy the stock right now, you still get an over 1% dividend. So Taiwan Semi, in my opinion, great buy and hold stock. Yo, Michael, what's up, man? He said TSSI. This is a company I own in my Roth IRA. So I've been trying to find some more growthy companies for my Roth IRA. And one of the companies I chose to buy a while back was TSSI. So let me show you what I like about TSSI. And again, very risky company because look at this right here. If you look in the top right, the market cap, this whole company is worth 670 million. So that is a very small market cap. So you don't really want to have a huge meaningful position. But think about this though. Remember, they're a $600 million company, and you're buying a company that, look at this, is making a couple million every quarter. And this growth rate's the real winner here. So revenue is up, first off, the revenue's up 500% year over year. So incredible revenue growth. And I love the profits here. They're now making a couple mil every quarter. So this is when I think that it might have the ability to double or something. So I decided to pick up a few shares. I love growthy companies, and they seem really growthy to me. So again, with these kind of riskier positions, $600 million market cap, you cannot have a huge position in them. I mean, my position is worth $130. And I have that same mindset for here in this portfolio. Like, look at this. Reddit's so risky, I can't have a huge position in them. Super micro. Where's my SoFi? Some of these companies are so risky, I just can't have a huge chunk of my position in them, but I still want exposure to them. So I'll just buy a little bit. All right. Hey, last week was rough, huh? I bought a lot though. Hey, yeah, Richard, we're finally getting to buy the dip opportunity. Have been looking for some stocks to buy because it's been tough to buy stocks. But one stock I have been buying is ticker symbol COKE, Coca-Cola Consolidated. One I've been dollar cost averaging into. You kind of see slowly buying into them. So yeah, hey, qubits. That's the main quantum momentum play. I don't really like qubits. They're ridiculously overvalued in my opinion, but they're momentum. So you know what? I'll show you this. So qubits, I just can't touch this company because first off, look at this market cap again. It goes back to just the valuation here. And here's why I stay away. There are so many ridiculously better companies at a $5.5 billion market cap. So this company's worth $5.5 billion. I don't know how. Because if you go to the revenue down here, I mean, first off, it's nothing. I mean, 15 million in the most recent quarter, a couple million before that. So very low revenue. They're losing, money, but that's not a big deal that they're losing money, but it just isn't worth 5 billion in my opinion. I think the quantum momentum has just been really strong right now. But if I wanted exposure to quantum though, I'd go with a less pure play and maybe go with a Google, IBM, Honeywell. Less pure plays, but you still get exposure to that industry. So yeah, that's kind of the truth there. I just like being fully transparent. I'm not trying to bag on anyone's stock here, but yeah, qubits, I think the valuation's a little nutty. I mean, there's a Dave, there's so many smaller market cap companies that have way better fundamentals. So hey, we can look at SoFi too. I wanted to look at Estée Lauder. I think that's the beauty company, ticker symbol EL. So yeah, Estée Lauder. So first off, they've kind of been struggling hard. Like, look at this. This is their 2018 price. So Estée Lauder is lower than they were back in 2016. And this is a beauty and cosmetics company. Yeah, look at this. If you go to where does this company's revenue come from? Well, 50% of it is skincare, then makeup, then fragrance. So I love these are high margin industries, but here's the thing. They're not having high margins. So if we go to this right here, look at this. Besides the most recent quarter, they made 150 million this quarter. Look at the previous quarters. They lost 600 million, 150 mil. So the net income has been really rough. And first off, they lost their growth. The lifeblood of the company, it's down 9.9%. So revenue's down 10, net income's really choppy. So I can understand why this stock has not been performing too well. And I think they pay a dividend. So they can't afford this dividend right now. They have a 2.2% dividend yield. They're losing a boatload of money. So I'd be careful with this one. Oh, look at that. The LAL family, largest shareholder. And Jane Lauder. on 6%. Anyway, Michael Burry sold every stock except that one. So you got to do more research on them. So what app do you use? App name? Oh yeah, hey Terrence, if you want to get this app I'm on, and this is actually a brokerage right here that I'm on. You can buy and sell stocks on here. So if you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. It's my favorite app. I have Robinhood and Webull, but this is my favorite one for analysis, lowest fees, and I keep my cash in here. Earns me a nice little interest in the middle of my screen there. So anyway, yeah, I love it for analysis. Let's keep going here though. What do you think of BEPC and Dexcom? Look at Dexcom. I haven't heard of them before, I don't think. So DEXCOM. So DXCM stock, let's check them out. So a $31 billion company. The stock has been flat since 2020, so that's not great news. So stock's been flat since 2020, but let's see here. Let's see if we can look at the revenue and see if it explains it. So revenue's up 15. That's good. Double-digit revenue growth. And look at the net income. They're making over $100 million in net income a quarter. So that's really good. But no dividend. I wonder why the stock has been performing not too well. I wonder what caused this gap down right here. I mean, maybe they just didn't meet the analyst expectations. Let's see. Kinda. I don't know. Maybe that one's at a good valuation. Can you do MSTR? Yeah, hey, MicroStrategy. So this is basically a Bitcoin proxy. So obviously MicroStrategy has been loading the boat on Bitcoin. And I'll show you that. All you do is go to the company's balance sheet. And if you're wondering, what are all these assets on MicroStrategy? Well, it's just the Bitcoin that they own. So what they do is they dilute the shareholder, they issue shares, and then they just buy Bitcoin with it. I'll show you that. Let's see. How much have they diluted you as a shareholder in the past year? Let's go find out. So all you got to do is go to the cash flow statement. Let's see. Hopefully this loads here. Sorry, my Wi-Fi is kind of tripping right now. There we go. So yeah, wow. Look at this. They diluted you $4 billion, $15 billion. So they issued 15 billion of shares, and that explains how they got all these assets. They bought a bunch of Bitcoin with it. And as we know, Bitcoin's been doing pretty good. So basically MicroStrategy, just a Bitcoin proxy. Can we look at your portfolio? Hey, 902. If you want to see my entire portfolio, I do a whole entire stock portfolio update on my YouTube channel. I'm fully transparent. YouTube channel is called Nathan Robert, link tree in bio. You can see every stock that I own in there. Hey, that's the best way to support me. I don't sell nothing. I don't have a course, book, Discord, WhatsApp, Telegram. The only thing I do have, though, is a YouTube channel. So if you want to help me out, subscribe to my YouTube channel called Nathan Robert, link tree in bio as well. And if you missed anything, I'm streaming on there as well. You can replay the live if you wanted to replay it or anything. But yeah. Here's my buy and hold growthy portfolio. We're up 13% all time in here. So honestly, not too great. We've underperformed. So anyway, someone said Palantir stock. Yeah, let's look at Palantir again. So what up, Seth? David, OTGLY. We'll try and find that one. Those weird ticker symbols I don't normally look at. But yeah, Palantir, look at this one. The stock's at an all-time high. You do got to be careful, though, this valuation. So they're trading at 116 times sales. So not 116 times net income, but 116 times sales. So this company would have to double the business to really be reasonable for me. But anyway, here's why they deserve probably the high valuation. I mean, this is really growthy. Half the revenue comes from the government. The government revenue is up 45% year over year. Tons of police stations are using Palantir. Also commercial businesses like Google and S&P 500 companies. It's up 33% year over year. So both really good segments of business are growing. They also have an unleveraged balance sheet, no debt, lots of cash. The cash is even earning interest. They're making net income every quarter. So Palantir is like everything investors love. It's AI, it's data, it's government, it's growthy, no debt, lots of cash, good growth. So yeah. CEG, CEG. I love this company. Oh, wait, let's see. FICO's a great buy. We'll look at FICO, PanW. Yo, what up, Richard? He bought PanW, ARM, Coin, Eli Lilly. Yo, I love those names. I don't love Texas Instruments, but I would happily own most of those, like 80% of them. Yeah, heck yeah. What apps you using? Yeah, hey, Junior, if you want to get this app I'm on, it's in the link tree there. All the apps I'm using are in the link tree there. All right, so anyway, Constellation Energy, what is this stock right here? This is actually the largest nuclear energy company in the world. So I actually own this one, so I might be a little biased, but I own them for a reason because this is the utility stock you want to own. They literally own 55% of all the U.S. nuclear energy reactors. So largest pure play for nuclear energy. It is tough buying this one. They're pretty much at all-time highs. But yeah, dang, I got $5,000 in that one. So here's my total percent change in every stock in here, by the way. How are we doing year to date? We're up 9.22% year to date. Yo, man, this April dip was nuts. We were down, 15% at one point, and now we're up 9. So absolute monster performance. So anyway, yeah, Constellation Energy, biggest and largest unregulated utility. They're acquiring Calpine, instantly accretive $2 of yearly EPS. So yeah. By the way, Zora. Yo, what up, Ryan? I'm not sure what that is. Let's see. RGTI. Yo, that's another quantum play. And to be honest with you, I don't love this one. Riggedy Computing. So yeah, if we look at the market cap, another huge market cap, or well, not huge, but a $4.2 billion company. And if we go to the revenue here, let's give them, so again, this is just not the kind of company I trust. I mean, how do you pay $4.5 billion for a company that the revenue fell 50% year over year? The revenue was $1 million this quarter, and they did some net income gap shenanigans. It says they made $42 million of net income. That's not real. You go to the operating profit. So anyway, they fortified their balance sheet, though, and that's absolute genius of them. They issued a bunch of shares, diluted the shareholder, because they even know the stock is ridiculously overvalued. So I just can't personally buy in at a $4 billion valuation on that company. There's so many better $4 billion companies with so much net income making, anyway. So I don't mean to bag on your stock there. Here's a stock I'd also stay away from, and I feel bad if you own this one. And again, not trying to be negative, but I just can't trust these kind of companies. So just think about this logically for a second here. With this whole company is worth $236 million. So you can buy in this company at a $236 million valuation. Probably could buy the whole company. But here's the company you're buying. You're buying a company that loses $200 million of net income every 3 months. And a super leveraged balance sheet. They've leveraged up their balance sheet from the previous year, are losing a boatload of money. Honestly, I think Wolfspeed might go to zero. So that's the real risk here. I mean, they literally lost the whole company's market cap just in the most recent quarter. So that one's all momentum. I wouldn't buy that one in my opinion. Tio said, OTGLY. Okay, this is a weird looking company. Project South America Unspawn. Okay, ADS. Let's go see what this is. So yeah, we're gonna switch their revenue from I'm good at knowing countries, but I don't know what PLN is. Well, let's find out. I don't know. PLN. What country is that? Anyway, let's see. Are they making net income? Yeah, well, they're making a little bit, 20 mil a quarter. I mean, to be honest with you, nothing's really blowing me away here. I mean, unleveraged balance sheet, yeah, but if you buy the stock, you're going to have to pay some ADR fees. You might even get some weird tax forms because they're not American. So nothing's really blowing me away here. I mean, the net income did fall 11%, but they do have a really good balance sheet. That's good news. Hopefully that was helpful. I don't know. So what was the other stock? VT stock. Okay. VT, I think that's an ETF right there. Is that Vanguard Total World Stock Market. So this literally owns a little bit of every single stock, but it's also market cap weighted. So if a company is only worth like 200 mil, it's basically nothing. So yeah, if we go to this right here, obviously Nvidia is the world's largest company. They're 3.8. Then Microsoft, Apple, Amazon, Meta. So it's market cap weighted, and it's the total world. So look, Taiwan Semi's on here. They're a Taiwan company, not American. So you get exposure to other countries as well. So it's kind of like one of the safest, best ETFs out there. Connor said hood stock. Yo, dude, this is my best performing stock of all time, and I regret every share I've ever sold to this company. So here, check this out. I am up 615% on my Robinhood shares. I took so much profit on them, and I regret it. But because they keep on going up. So anyway, yeah, I bought all my Robinhood shares a long, long time ago, right after the IPO. So yeah, I've been holding the bag on Hood for a few years, but they're finally doing their thing. You know what? Let's analyze them in here because why not? So here's kind of the good news with Robinhood. They're at $99.90 stock. And check out the growth here. They're just so innovative, so growthy. I mean, look at this revenue growth. I mean, incredible revenue growth. And not just revenue, but after-tax net income. Robinhood is making a couple $100 million of net income every quarter. A lot of people didn't take Robinhood serious. They used to lose a couple $100 million every quarter. Well, now Robinhood's finally making a lot of profits. So I think that's a great buy and hold for the long run stock. I do think it might be a bit overvalued here though. Zora, a couple weeks old. Wait, what ticker symbol was ZORA? I can't find that one. ZORA. Huh. And let me know the ticker symbol. DECK is super cheap here. Oh, Decker Outdoors. So Decker Outdoors, this is the company that owns a bunch of shoes, shoe brands. I think they own like Uggs. Let me just go verify that because we're here. What do you think of the Figma IPO? Way too overbought. Yeah, dude, the IPO, it went up like 4x. Yo, Jace loves snow. Thank you so much for the rose there, man. I hope you're having a great Saturday. Yeah. Let me know if you got a stock you want me to look at. So yeah, this company does own UGG. So if you're wondering what is DECK stock, well, here's what they own. They own the UGG brand and Hoka. Yo, Hoka shoes for like in the running community has been really strong. You know, Nike has been losing their market share for like the running shoe community. But anyway, I love the profits here. Look at this. They're making a couple hundred mil a quarter as well. So I think that one might be oversold. What's the valuation actually? The PE is a 15. So yeah, I almost trust them more than Nike. All right. Best stocks for cheap contracts and high volume. Well, you'd want to go with like something like this. Again, this is so risky and low price because this is TSLL. The stock price is only $10, so options are really cheap. So if you're just looking for something risky, I mean, TSLL is a cheap way to get a high volatility option. But again, I wouldn't really recommend that unless you're feeling a risk appetite. But someone said, as a runner, I can confirm. Yeah, hey, what up, Jace? Yeah, Hokas have been taking market share for the running community. Let's see. Can you do analysis on AMPX? And do you think Realty Income is a good hold forever stock? US, I think Realty Income isn't a good buy and hold forever stock. It's good for when you want to retire and need income because it doesn't, you know what, let me go to them real quick. Sorry, and then we'll go back to that one. So someone said, is this a good buy and hold forever stock? I don't think so. I think you want to buy this when you want to live off your dividends. You should buy like look at this. Realty Income is lower than it was in 2020. So you're not going to outperform the market, but what you do get is a 5.7% monthly paying dividend. That is safe. The dividend is safe in my opinion. So I wouldn't hold that one forever if you're trying to like outperform the market. But you buy that to maximize your dividend income. Anyway, let's get back to AMPX here. Sorry, I'm kind of all over the place. I try to get to everyone's stock. I try not to spend too much time on one stock. So here's AMPX. So let's check out this company. So it's a battery company. Let's see. Only 34% of the revenue comes from the US. So let's check out the actual business though. So this is actually really good news. Look at this revenue growth. I mean, this time last year, revenue was 2 million. Now it's 11.3 million. So that's actually very strong revenue growth. They're still losing net income every quarter, but that's all right at this really high growth rate. So as long as it can keep up this growth rate, they seem really interesting. Let's see here. And Hoka, yo, what up? What up, STGX Farland? And yo, Mobina, what up, man? Hope you're having a good Saturday. What stock has the 5.7% dividend? That was Realty Income. The ticker symbol is literally just one letter O. So Realty Income, they're actually known as the monthly paying dividend stock. They have that patented, but they do triple net leases. This is a real estate investment trust, a REIT, and they actually have to, by law, pay out most of their taxable income in the form of a dividend to avoid taxes. So that a normally high 5.7% dividend yield is actually sustainable. But also, that's why they don't outperform the market as well. I mean, it's lower than it was in 2020. You buy it to maximize your income, not to really beat the QQQ. You feel me? You think the S&P is overvalued? Not too much overvalued. Not too much. But actually, the SPY's been down 5 days in a row, believe it or not. Check this out. So, oops. Like we did open higher on Thursday, but like check this out. We've kind of had 5 red candles in a row. So I'm curious to see what happens next week. Yeah, we did open up higher on Thursday, but from the Meta and Microsoft earnings. Man, Meta and Microsoft, mostly Meta, had just really good earnings. Oh, hey, by the way, I've never shown this company on the stream before. This is one I'm actually looking to get into. They just gapped down on earnings. This is a really shareholder-friendly company I'm looking to buy, EXEL stock. And check this out. They're very net income positive. You know, look at that. They're making over 100 mil of net income a quarter. Very good balance sheet. And what is this company doing with the 100 million of net income a quarter? More than like 180 million of net income a quarter. And look at this. Also, debt-free company. This company has no debt. And where's the cash? I just saw it. 164 million of cash. So no debt, 164 million of cash. What are they doing with all that? Well, here's the best part. They are buying back their own stock like crazy. So yeah, if we go to this right here, I mean, they spent 275 mil in the most recent quarter, 200 mil. So these crazy buybacks have led to the total common shares outstanding going down by 5.3%. So the shares went from 285 to 270 million. So whenever the shares outstanding go down, the net income, the EPS, which is net income per share, the net income is spread out through less shares. So it gives you more ownership in the company, literally gives you more net income, and just forces the stock price to go up, which is pretty cool. So Yato said, "Can you do HNST, please?" So this is the Honest Company. Nothing really blows me away with this company because they just sell a commodity. HNST, the Honest Company, they just sell diapers and wipes. That's most of the revenue. They just sell a commodity. But one thing I do like, they have no debt whatsoever, completely debt-free company. Look, they're very small, only worth 500 mil. So $500 million company, no debt, and let's see how much cash they have. So good news, 72 million of cash and no debt. So a good chunk of their market cap, like 18% of their market cap, is just their cash on hand. And look at this, they're finally somewhat getting net income positive. I mean, they made 3 million in the most recent quarter, so I would like to see them keep that up because they have been struggling to really stay net income positive. So yeah. Um, let's see. How do you feel about ARE versus Realty Income? Is that Ares Alexandria Real Estate Equity? I like Realty Income more than this one. I've looked into this one. I think they have a lot of office properties. So Realty Income, I'd like that one more. Ticker symbol O. So what app is this? Yo, DS Scott, if you want to get this app, it's actually a brokerage that I'm on. If you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. But yo, Jace, he said Qualcomm stock. Heck yeah, dude. This company, I think, is a good just hold for the long run dividend growth stock. So here's the good news. If we go to the dividend, if you buy the stock right now, you get a 2.32% dividend. So you get a really good dividend yield, and they have a lot of room to raise their dividend. But check out these financials right here. Like, first off, the PE is a 14. Like, that's a low valuation, a 14 PE. Here's their market share, a 28% smartphone chip market share. And if we go to the bottom line, the net income, I mean, this is incredible. I mean, they're making $3 billion of net income every quarter. So really good numbers here. So I think this is a good buy and hold for the long run stock. And hey, no way. Tengrika, probably saying your name wrong, but Tengrika, thank you so much for the rose there. I really appreciate that. If you got a stock you want me to look at, I got you. Can we talk about CoreWeave and Intel? CoreWeave, I feel bad. Actually, that's an Nvidia holding. So if we go over here to the Nvidia portfolio, so this is every stock Nvidia owns. Their main holding is CoreWeave, and this company also just acquired CoreZ, which is the company that mines a bunch of Bitcoin. They're like one of the largest Bitcoin mining companies. So CoreWeave bought a bunch of that, bought that company. And here's the thing: this company just IPO'd, so there's not much data. Here's the only data we really have here: the revenue grew 420% from the previous year. So here's 2024 Q1 went from 188 million to 980 million. So first off, when I see this is a really growthy company. Like, geez. So they're interesting. I'm waiting for more data there. But yeah, Nvidia owns a bunch of them. They were supposed to go big, but just been dead money. Yeah, that's unfortunate. I know the high interest rate environment isn't great for the REITs. Intel and MU, these are all in the same sector. I want to get to all these here. Here's Intel. I feel bad if you own Intel stock because look at them. Intel, this is the truth. Intel is the same price, same stock price that it was back in 1997. So if you bought Intel back in 1997, you're actually down on your money. So here's why also. So obviously Nvidia is at all-time highs, Taiwan Semi, a lot of these other ones are doing great, but not Intel. And that's because of the financials. So a lot of people like them because they're like, hey, they have a huge market share, 63% GPU market share. That did fall 3% year over year. But here's the bad news. Look at the money they're losing. I mean, this is the free cash flow. They're losing a few billion of free cash flow a quarter, but look at the net income. I mean, this is not good. I mean, how do you lose 17 billion just in one quarter? That's a huge chunk of their market cap. I mean, they're losing billions. So, I mean, they really need to just make profits and turn around the business. Did the revenue grow at least? Let's see. Did the revenue grow? Revenue's up 0.2%. So at least it did kind of grow. Can you help me? Should I hold or sell FI stock? Let's see. FI. Is that Fiserv? So let's check them out actually. So Fiserv, yeah, dang, look at that. They're kind of like stepping stone down. Like, look, gap down, gap down, gap down, and they just gap down again. So Let's go look at their earnings right here. They might be oversold, but man, this company just keeps getting whacked. Let's see. So Fiserv, I don't remember what they do. And yo, value yourself. Thank you so much for the rose and also invested '09 for the lightning bolt. Yo, I really appreciate that. And I just realized, hey, sorry about that. My phone has disconnected from the Apple TV. So we're back. Sorry. So here's Fiserv. They're a merchant and financial company. So that's interesting. And most of the revenue just comes from the US and Canada. Let's see. So net income down here. So this is the good news about Fiserv. And this is probably why I just hold this one. I don't know if I'd buy more. I don't know if I'd sell out of them. But yeah, I mean, here's the good news. At least they're making, look at that, a lot of net income every quarter, $1 billion the most recent quarter. So there's no bankruptcy risk here. So I do wonder, like the financials don't explain why the stock has been hurt so much. So there must be something else I don't know. They don't pay a dividend. So, I wonder what happened there. I probably just hold that one. Screen frozen. Yeah. Hey, sorry. My thing disconnected. AACT stock. Yeah. Let's see. Ares Acquisition Corp. So I haven't heard of this company before, actually. All right, let's see. So wow, look at that. The stock is like straight up. They must be in like treasury bills or something. Let's see. So company. So yeah, this is like an asset holder. So they just like own a bunch of assets. So look at this balance sheet right here. Very good balance sheet. Literally no debt, lots of cash, no dividend either. Yeah, so a blank check company. So they're for merger, asset management, all that. So hey, yeah. Kind of like an ETF almost. Let's see. Can you look at SMR? I think that's another like nuclear small modular reactor nuclear stock. So this has been one of the higher momentum nuclear names, and here's why they're all right. Because they just got a new contract, and look what that did to the revenue. Because before today, I mean, they had no revenue. $1,400,000. But look, it just jumped up a bunch. So that's the good news. They did just get a new contract, but I'd still be careful with this company. Out of all the nuclear stocks, I'd probably rather go with like a VST, maybe even a Talon, definitely a CEG. I love CEG. So that's the only thing. They're a $12 billion company. They might be a bit overvalued on the market cap. SHLD ETF, Global X Defense ETF. Yeah, let's check it out, Jay. So this ETF right here just owns, kind of as the name implies, a bunch of global and defense stocks. So look at that. Palantir, Raytheon, Rheinmetall, BAE Systems, Lockheed Martin, Northrop Grumman. Man, Northrop Grumman has been, dude, absolutely crushing it. Yeah, all-time high. What's the dividend on that one? 1.5% yield. Yeah, dang, I wish they would go lower because I really wanted to buy that stock. All right. All right. DevCEG. Oh, Adobe stock. Hey, yeah, let's check out Adobe. So I'm on their software every day. I mean, I'm on Photoshop, After Effects like every day for my YouTube channel. So hey, by the way, if y'all want to support me, go subscribe to my YouTube channel, Nathan Robert, Linktree in bio as well. I'm streaming on there. If you missed anything, you can replay it. But here's Adobe stock. The reason the stock has been getting hit so much is because the thesis is really being hurt here. I mean, basically you use Photoshop and to like make logos and stuff. I know someone who just used ChatGPT to make a very good logo. Like that would take me like hours to make in Photoshop. So the thesis here is that their products are going to be less needed. And like in 10 years from now, it's really uncertain what's going to happen. So that's why the multiples kind of fallen. But for right now, the business is doing great. Revenue's at a record. Free cash flow. Look at that. They're making over $2 billion of free cash flow a quarter. Net income's crazy good. 1.9 bill plus. So yeah, pretty good. What happens is, hey, Sparsh, this is actually a brokerage right here. If you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. And also, I think Adobe does some buybacks as well. So let's see. Common stock. So yeah, look at that. Wow. Adobe spent $3.5 billion just in the most recent quarter buying back their own stock. So this is such a shareholder-friendly company. Since they don't pay a dividend, they can just buy back their own stock like crazy. And $3.5 billion, that's a huge chunk of the company. Yeah, they traded a 22 PE. I mean, look at this valuation. I mean, the industry average is a 39. They're just, I mean, at a very low valuation. I like Adobe. Let's see. Austin said ZTS stock. Is that Zoetis? Man, I love Zoetis stock. So this is kind of a dividend growth company. If you look at the dividend right here, you get a 1.22% dividend, and the payout ratio is only at 31%. So hey, pretty fair dividend payout ratio. The PE also is a 26. This is like the lowest PE it's traded at in a very long time. They usually trade at a high market multiple. This is a pet care company. So a pet, like they take care of your pet. So parasiticides and cows and a bunch of other stuff as well. Like they have these little, if you've ever looked at a cow and seen like this little white thing in its ear, it's like this little thing that spreads across their body and prevents parasites. And anyway, they're in parasiticides, vaccines, dermatology, anti-infectant. So they're in a lot of industries, which is cool. And look at the net income. The profits here are crazy. I mean, they're making 600 mil pretty much of net income every quarter. I think the reason that why their stock kind of been flat recently is like they're not growing too much. I mean, look at the revenue. Revenue's only up 1.3, so that's not great. Revenue's up 1.3, but the net income is up 5. So they are growing their margins a bit, so that's good. Someone said, oh, MU stock. Yeah, I wanted to look at Micron as well. And I want to look at Reddit too and Amazon. What about penny stocks? Do you go for those? Yo, I don't own many penny stocks. I don't normally go for those, but here are the 3 that I do own. These are all worth under 600 million each. I just made a YouTube video about it too. GHM, DCTH, and TSSI. 3 really small, like $600 million companies that I bought the dip on. So here's Micron Technology though. So let's see how the company's doing. So yeah, they have this compute and networking business, and it's seen just immense growth. I mean, look at this. It's up 97% from the previous year. This is incredible growth for Micron. Also, we go to the profits here. I mean, this is what people love to see. This is what I want to see if I'm a shareholder. I mean, look at the net income. It's up 500% year over year. I mean, especially from last year. I mean, they used to be a tough buy. I mean, look, they were losing net income every quarter. Well, now they're actually making net income every quarter, really making that dividend yield sustainable. They're doing buybacks as well. So Micron, I do like them. So Reddit stock. So Reddit had such impressive earnings. I almost don't believe it. I think this is a $200 stock, and I've been saying I think this is a $200 stock for a long time, if anyone remembers. And here it is at $188. I think they're going to go higher. A lot of people think Reddit's like a meme stock, meme company, but let's judge this company for their financials. So forget the name Reddit, forget that they're named Reddit. Like, here's what I love about this company. First off, how did Reddit pull this off? After being up 53% from the previous year, the revenue grew 77%. So first off, I don't know how they did that. Just incredible revenue growth, and they made a record net income. They made 90 million of net income. The FCF, which is free cash flow, is incredible, up 300%, made over 100 mil of free cash flow. And also look at this absolute fortress of a balance sheet. So Reddit has no debt whatsoever. Let's see how much cash they got. Yeah, look at this cash, 2.06 billion of cash. Literally no debt at all. I mean, just monster balance sheet. So Reddit, man, I love them. I might be biased though, because I do own them. Yo, what up, Shauna? Oh, and let's go look at SoFi too. I've already covered them, but we'll look at them again. Definitely been doubling down on Adobe short-term volatility machine. Yeah, I think the valuation's too cheap to ignore on Adobe. Yeah, we'll look at ISRG too. Yeah, I want to look at ISRG. I love that company. We'll look at SoFi really quickly. And someone said PSEC. Yo, I'd stay away from PSEC. I think they're a dividend trap. So here's SoFi Technologies, though. Incredible earnings. I'm actually shocked the stock isn't up more. If we go to the revenue growth here, I'm surprised they pulled this off. The revenue grew 42%. I mean, incredible revenue growth, and they made 100 mil of net income. People are really taking SoFi serious. They're making net income every quarter. If we go to the where the revenue comes from, they're a fintech. They have their own banking charter. So 40% of the revenue comes from this financial services business, and you won't believe the growth here. This is why I think SoFi deserves the high multiple and all the stock price appreciation. The financial services revenue is literally doubled. It's up 101% year over year. These year over year growth rates are the reason I love SoFi. They're so growthy and innovative. So I just think they're a good buy and hold stock. If they go under 20 again, which they might not, but if they do, I might consider looking buying more shares. ISRG. Oh, I'll show you my position if you want to. I do own SoFi. I got 25 shares of them, not much. Very small position. So ISRG, this is a medical device company with just incredible fundamentals. So they've also been doing really good, like especially since 2019, they've more than doubled. So check this out. Here's what I love about this company. So look at this, instruments and accessories, systems and services. How's this doing? So their main segment of revenue, the instruments and accessories, look at that. Really good double-digit growth, up 18% year over year. So really good growth there. Let's just see net income. So yeah, look at that. So revenue's up 21, net income is up 25. Yeah, so they're growing their margins a little bit. I mean, look at this net income. They're making 600, 700 million in net income a quarter. So incredible. And look at this, another fortress of a balance sheet. I mean, no debt, lots of cash. Cash from operations is super strong as well. So ISRG is just quality of a company, kind of like a waste management. What up? So let's see. Reddit and XPV are the best upside potential. XPV, is that XPing? Huh. Amazon, yeah, let's go look at Amazon real quick because we haven't looked at them in a while. So Amazon reported earnings on Friday or Thursday, and the stock gapped down, so not good. And I think it was because investors weren't too happy with the investing activities numbers. So they invested 40 billion back into the company. So a lot of people like that. I actually like that, but that did a number on their free cash. I mean, look at this free cash flow. For a Mag 7 company, this isn't really great. They lost 8 billion last quarter, only 300 mil this quarter. So not great, but the net income was incredible. Revenue's up 13, net income, So revenue's up 13, net income's up 34. Look at this. They're making like close to 20 billion of net income a quarter at this growth rate. I mean, their net margin expansion has been incredible. I mean, it used to be a single digit margin business. Now it's 10. But yeah, I think it's the free cash flow number. And it was a bit slowing AWS business. The AWS business lost 2% market share, one from Google, one from Azure Cloud, Microsoft. So yeah, I still think that one's a buy the dip opportunity. What app are you using? Yo, DYL, I'm actually on a brokerage right here. So if you want to get this brokerage that I'm on, buy stocks and stuff, it's in the link tree in my bio, the very first link there. It's an affiliate link too. So hey, do you plan on consolidating or making any changes in August? The only changes I'm going to make would be adding on to new companies or buying into my positions. Once I buy a stock, like this portfolio specifically, if you kind of look in the very top here, it says buy and hold portfolio. I called it that because once I buy a stock in here, I do this on my YouTube channel. I try to never sell it. Like if you go to my YouTube channel, go back a year, I literally owned all these exact same holdings, except for Nike. I sold out of Nike. I have sold a little, but I try to literally never sell a stock once I buy it in here. But I do have some other portfolios where I do some trading and stuff. Like in this one, but like I just bought Progressive Corp. We're down bad on some companies like UiPath, Zoom. So yeah, we do got some losers. So anyway, AbbVie stock. Yo, I love this company right here. This is a great healthcare name, ABBV. So this is like a stock. Once you buy it, you just never want to sell it. And hey, look at that. This app is telling me that there is what is this? A bullish continuation triangle, and the rise probability is a 92% chance. So hey, I guess that's good. That's some technical analysis, not really fundamentals. Dang, my phone's getting low here. Dang it, it's lagging me. So I do apologize, but hey, thanks again, Shauna, for the rose there. I really appreciate that. So let me show you what I also love about them. Look at this yield. I mean, you get a 3.3% dividend yield with AbbVie, and here's what they own. They own Skyrizi. This is their largest prescription, and look at the Skyrizi growth. This is what I don't believe. Like, 2019, it was 350 mil. I mean, 11 billion, up 60% year over year. It was up 70% year over year to 3.43 billion. I mean, these year over year growth numbers are incredible. So they have the Skyrizi prescription, which is huge, largest segment of their revenue. Then they own some other ones like Rinvoq. Well, let's see how it's doing. Up 57% year over year. So basically, they have these prescriptions that are growing like crazy. So AbbVie is still a really growthy company, in my opinion. So, and the reason they had a little one-time adjustment this quarter, that's why the payout ratio says 200%. But yeah, their dividend is definitely sustainable in my opinion. HCTI, what's that one? So, healthcare. So, hey, we don't really cover these kind of stocks on this channel. So if you're wondering, what is this company? Well, here's why we don't cover it. Look at this market cap. The whole company is worth 7.7 million. I mean, that's just too low. So, we don't even really want to talk about that. So good luck with that company. Not one I'd probably hold. What app is this? Yeah, hey, Maximilian. If you want to get this app, it's a brokerage. It's in the link tree in my bio, the very first link there. It's my favorite app for analysis and stuff. Yeah, and you can also see like all the super investor tracker. Yeah, so check this out. You can like see Nancy Pelosi's holdings, Buffett, Kathy Wood. You can see all the super investor portfolio. And these are super investors where they literally have to, by law, make all of their trades public by SEC. So yeah, we can see like what does Nancy Pelosi own? She owns Netflix, CrowdStrike, Visa, Salesforce, Amazon. So anyway. Let's get back to the analysis here. So how much are you up, someone said. So for this portfolio specifically, we're not to brag, but I mean, we've been doing really good. All time, we're up 101% in here versus the S&P only up 47% all time. So this portfolio specifically, we've doubled the return since inception. All right, Intel, and hey, what up, SD? So we can look at Intel as well. So INTC, you're probably not going to love my analysis on this company because Intel has not been doing too good. And here's what you got to be careful with. So simply, I think Intel has not been doing too good. I mean, look at that huge downtrend because they're just losing a bunch of money. And they do have a good GPU market share. Look at that, 63% PC GPU market share, down from 66%. But here's kind of the bad news. I mean, if you go to the net income, I mean, look at that. They're kind of losing a lot of money. 3 billion this quarter. I don't know how this is possible, but they lost 17 billion just in that one quarter. Don't know how. And same with the free cash flow. This isn't good. They're losing billions in free cash flow every quarter. So I just want to see the trends start to get a little better. And they're not really growing. I mean, revenue's up 0.2. So I can understand why Intel has not done so good. Intel, matter of fact, is the same stock price that it was back in 1997. So in my opinion, I'd rather go with a Taiwan Semi, maybe even an AMD or Nvidia. What is this one? LHX. L3 Harris Technologies. Look at that. Looks like the stock's at an all-time high. So congrats if you own this company. Yeah, hey, News Nuff. Again, Linktree in bio, very first link there if you want to get this app that I'm on. It's actually a brokerage. Sorry, people keep asking. I need to pin a comment saying that. Yeah, and again, if you want to get this app, I'm on Linktree in bio, first link. It's called Moomoo. It's an affiliate link too. Anyway, L3 Harris Technologies, they have a 1.7% dividend yield here. So pretty nice dividend on this company. Let's see, Space and Airborne Systems. So hey, Aerojet Rocketdyne. Hey, so sounds like they're an aerospace company. And if we look at the net income here, yeah, look at that growth of the net income. I mean, net income's up 25%. They're making like 2 billion of net income a year now. So those net income numbers are very strong. So, hey, yeah, that one's at all-time highs. I know that sector, people love that sector right now. PEGA stock. What's this one? PEGA. Oh yeah, hey Dex. Yeah, sorry I didn't put it in the YouTube chat there. Yeah, hey, it should be in the link in the description of the YouTube stream, but I also just put the link tree in the YouTube chat. If you go to the first link there, you can get it. It's actually a brokerage, this app that I'm on. So, oh, what up, Eric? We'll look at TT as well. We'll look at Train Technologies and Nike, so we can look at those too. So here's PEGA, Pegasus System. Looks like they've been performing pretty well the past couple months here. Let's see if we can find out why. Huge gap up on earnings. So yeah, they just triple beat on earnings. You know, the orange line is what the analysts were expecting. They're beating like crazy on every metric. So that's good news. And look at that. They're making net income every quarter, way better than what it used to be. So if you kind of average it out there, they're making like 50 million in net income a quarter. They're deleveraging their balance sheet. So even though the assets went down, the liabilities went down by more. So look at this. They had a 71% asset to liability ratio and it went to a 52. So you own more equity in the company. Great news. So anyway, PIG, I can see why they're doing pretty good. So some of the thoughts on TT, Train Technology. So yeah, this one's on my watch list. I love this company. And check it out. They're doing pretty good. They're pretty close to all-time highs here. So check this out. They just sell equipment, services. 60% of the revenue comes from the US. But look at this equipment revenue, kind of grows single digits, up 5% year over year. So decent growth there. But here's the good winner. The services revenue tends to grow double digits every year, over 10%, which is good. So if we go to this right here, though, the net income is really strong. I mean, literally 880 million the most recent quarter. It grew 15% from the previous year. How much did the revenue grow? So yeah, the revenue only grew 8%. But the net income grew 15%. So what does that mean in English? Basically means they're growing their margins. So yeah, the net margins grew by 7% year over year. Really good. I mean, imagine if Coca-Cola can grow their margins by 7%. You sell like 1 million bottles of Coke, a 7% margin is really meaningful. So anyway, really good margin growth there. I see why they're at all-time highs. Yeah, hey, what up? We said GEV stock. That's GE Vera Nova. So we can check them out too. So ever since the spinoff ever since GE had the spinoff from GE Aerospace, GE Veranova, all the companies separately have traded at higher multiples because management can really focus on the team. And GE Veranova's been crushing it. A lot of it is from the PJM pricing, where they just had the highest auction ever of electricity prices in the PJM area. So GE Veranova is heavily exposed to that. Basically, also we can see power, wind, electrification. This is a utility electricity play, but look at this. They're making a lot of net income. If you kind of average it out there, they're making 500 mil a quarter. So pretty cool. A lot of the nuclear stocks have been on fire. Same with a CEG. That's my favorite one that I prefer over them. CEG stock, all-time high right now. Incredible. Let's see here. I love that. Hey, appreciate that, Dex. I really appreciate you, man. And Lucas said AAPG stock has a lot of growth. So let's check it out. I love growthy companies. Then we'll look at what was that company? AMD. Yeah, remind me to look at AMD. I want to look at AMD and Uber. Yo, Uber stock too. I want to get to all these. So anyway, here is AAPG stock. So let's check out the fundamentals here. So first off, this is a Chinese company. So we'll switch the revenue from Chinese to US dollars. But let's see. Do they have any revenue? Yeah, so look at that. For the full year 2024, it did grow a good chunk. So, yeah, 300%. They did lose net income on that. They don't have it on a quarterly basis. So, I do wonder what it is the most recent quarter. Maybe it's right here. Nope. So, anyway, that one just IPO'd. I don't know. They're Chinese. I'd be careful with that one. So, let me go with Uber first. So Uber Technologies, we haven't looked at this one today, and I love this stock. I mean, incredible company to buy and hold forever, in my opinion. Uber actually just placed a $1.2 billion order to buy $1.2 billion worth of Lucid cars. So Uber and Lucid just went to this huge partnership, and those Lucid cars are actually powered by Nvidia's software. But anyway, Uber, we can kind of see, obviously, we all know what they do, like mobility, delivery. Like, look at the delivery business, like Uber Eats. Let's see how that's doing. Uber Eats is up 18% year over year. So, hey, not too bad. And here's why Uber can easily afford to buy $1.2 billion worth of cars. If we go to the free cash flow here, they literally made $2.3 billion of free cash flow just in the most recent quarter, up 65%. So, incredible growth on Uber and also the net income here. I mean, look at this. They're making billions of net income every quarter. So, Uber, in my opinion, is like a good buy and hold forever stock. And also, here's another cool little fact about Uber. If we go to this ticker symbol right here, ticker symbol GRAB. So Grab Holdings. This is another publicly traded stock that I want to pull up here. There we go. Grab Holdings. So if we go to the largest shareholder of Grab Holdings, it's actually Uber Technologies. So Uber owns 13% of this company. So basically 13% of all the free cash flow and net income goes back to Uber. And look at the free cash flow they're making. I mean, it's just started to really take off. They're making net income every quarter. They have no net debt, which is really cool. So if you're wondering what is Grab, they literally do the exact same thing as Uber, but in look, all these other countries. So like, look at this. Notice the US and Canada aren't on here. So by Uber buying this company, it gave Uber instant international diversification. So I think that was genius for Uber to do. I think Uber's a great buy and hold. What is Magnemite? MGNI stock. So what is this company? We'll check them out here. How'd you hear about Grab? I don't remember, man. Ferris, it must. Well, I first heard about Grab like 2 years ago. So anyway, here's Magnite stock. So let's go see how they're doing. So they're a $3.1 billion company. Let's see what they do. Provides a platform to all its customers, buyers, and sellers. Okay. What about revenue? So revenue's up 4% year over year. Not great, 4% revenue growth. But the net income trend is getting better. You know, they lost 45% less net income. So as long as they can keep this trend up, you know, they made millions last quarter, 36 million in net income a quarter. So yeah, I would like to see them get net income positive. Yeah. And I would like to also see the growth go higher. I mean, only 5% revenue growth. Not great, to be honest with you. But yeah. Oh, yeah, let's go look back to AMD. I forgot to get to this one. I do own AMD, by the way. If I go over here to my growthy portfolio, yeah, they're my second largest holding. We are up 37% on them finally. I didn't even like time the bottom on this one. I mean, look at the bottom. They bottomed at $76. I got in at $124. So I definitely didn't like time the bottom on AMD. They've just been a really good performer. So let me show you what I love about this one. Obviously, we know AMD sells GPUs. They have a 17% PC GPU market share. But do you know who uses GPUs? It's actually data centers. As we see a lot of companies like Google, Meta, Amazon buying a bunch of GPUs. Well, here's the thing. You know, AMD just makes the GPUs themselves for the data center so they can cut out the middleman, get the newest product at the lowest price because they're AMD, and their data center business is booming. Up 57% year over year. So if you're looking for a data center play, AMD is a really large one because that's where half the revenue comes from. And also look at the profits here. $730 million of free cash flow, up 91%. I mean, look at this net income right here. I mean, net income's $700 million the most recent quarter as well. Look at this fortress of a balance sheet. So AMD, for all those reasons, I do hold and own that one. What's this app called? Yo, hey, Vincent, what I'm on is actually a brokerage. So if you want to get this brokerage that I'm on right here, it's actually in the link tree in my bio, the very first link there. It's an affiliate link too. And yeah, I love doing analysis on this app right here. So yeah, someone said thoughts on UNH and NVO. So yeah, a lot of the healthcare names have been getting whacked. So I feel bad if you own this one. Like, look, United Healthcare is just keeps bleeding down. And honestly, I think this one's worth a nibble. Not a huge position, not a full size position, but like a little small allocation if you're looking for something to buy on a dip. I think they might be oversold because look at this. The PE is a 9.9. They're already priced in for their net income to fall by like 30%. So it might be overpriced in. We're actually a customer. We actually use the OptumRx business, and look at the OptumRx growth here. I mean, it's been really incredible. It's over 130 billion of annual revenue now. So OptumRx is growing like crazy, but yeah, you want to be careful here because the regulation is not in their favor. Here's the net income. The net income did fall 19% year over year, kind of expected, and the dividend's really nice. Look at that. So even if the stock does nothing, you still get a 3.5% yearly return just in cash dividends. So pretty cool. TTD stock, is that the trade desk? Yeah, so this is the TV advertising company. So, the thing is, there's some good news and bad news about this company. They have really good margin growth here. Let's see. So, revenue. So yeah, look at this. The revenue's up 25%. So pretty good. Revenue's up 25, but the profits, the net income is up 60% year over year. So what's that mean? It means they're growing their margins like crazy. So yeah, they're making net income every quarter. Same with free cash flow. So yeah, they're just an advertising place. So if you're looking for an advertising stock, Trade Desk is pretty good. Um, Bull stock. Hey, what up? Hunter said BULL. So this is Webull right here. That's actually this app right here, publicly traded. So hey, I'm a user of their platform, so I've probably given them a lot of fees. So anyway, here's Webull stock right here. They just IPO'd. And we can kind of see they went up like crazy on their IPO, and now they're back down to $13. So here's what I like to look at, the net income. And here's the good news. They actually made net income in the two most recent quarters. So that's the good news about Webull. But they did just IPO. I would like to see some more history around this company. I love their platform. I know their share structure is a little weird. They're also Chinese, but yeah, I got to do more research on them. I own Robinhood and Futu. I own two other brokerage stocks. I own FUTU. Incredible. Actually, if you're wondering, hey, what is FUTU stock? That's actually this app right here. So this whole time, this app that I'm using right here is publicly traded, and their stock is ticker symbol FUTU. So and here's how they're doing, by the way. The app that I was just on, look at the net income. I mean, just incredible. So anyway, it's good to know that this app right here is making a lot of money. They're not gonna, even if they went BK, it's still FDIC insured. Yeah, if you want to get this app, again, link tree in bio, very first link there. It's actually a brokerage. And anyway, let's keep going. Carvana stock and CAT. Yo, let me go to CAT first. Yo, my phone's about to die here. Yo, if y'all wanted the follow button, by the way, we go live every day. My main stream of the week is on Sundays. So tomorrow's stream is going to be popping. So if you want to hit the follow button, I'd really appreciate that. We're going to be streaming tomorrow. I like to stream every day. By the way, I sell nothing. I don't have a course book, Discord, WhatsApp, Telegram, literally nothing. Watch out for people impersonating me. All I have is a YouTube channel. So the other way to support me is just subscribe to my YouTube channel. But yeah, I sell nothing. Watch out. So anyway, here's Caterpillar. They're like the heavy machinery play. And the stock's at an all-time high right now. And here's why I think they could keep on going to higher highs. I mean, look at the PE. The PE is a 20. So I feel like they could stretch that up to a 22, a 23 PE. And it wouldn't be ridiculously overvalued. So let's see here. Oh, yeah. Hey, what up, Lucas? We'll check out OWLT as well. So look at that. I love how diversified their revenue is, energy and transportation, construction. These heavy machineries are using construction and resources. So a lot of like mining companies use them as well. So anyway, yeah, the net income is pretty strong. Over 2 billion of net income a quarter. It did fall a bit, but the PE is so low that it doesn't matter. Also, the the dividend here, you get a 1.3% dividend. So over 1% yield, and the stock's at all-time highs. You don't see that usually. So OWLT, someone said, trust me, bro, you will like this one. So let's check it out, man. What up, Lucas? Hope you're having a good Saturday. Hope everyone's having a good Saturday. So stock's at an all-time low right now. Not great. They're a $122 million company. So yeah, look at this right here, the market cap. This whole company's worth 100 mil. So I don't love that they're only worth $100 million. Let's go look at the financials here, though. So revenue's up 43. That is good. They have more liabilities than they have assets, which isn't great. So revenue's up 43. They did make net income. No, they didn't actually. So you see how they made 3 million. That was actually some one-time adjustment. They actually lost 3 mil. Nothing's really blowing me away there. I do like the revenue growth, that the revenue is up 43, but it's such a small company. It's hard to trust it really. But hey, what up? AAP, is that Advanced Auto Parts? Yeah, Advanced Auto Parts has really been struggling compared to like an O'Reilly. Hey, O'Reilly and AutoZone, they're such great companies in terms of buybacks. But let's see why this one has been underperforming. Let's see. So yeah, parts and batteries. Everyone's got to go to an Advanced Auto Parts store at some point, or like a um, O'Reilly. But yeah, look at this. This is the bad news, and I think this is why the stock has fallen so much on the weekly. So the revenue fell 18% last year, and now, after being down 19%, it's now down another 7. So the company really lost its growth, which isn't good. And if we go to the net income, I don't know how, but they lost 400 mil last quarter. Actually, more like 800 mil. Jeez. So they did make net income this quarter, though, so that's good. But anyway, that puts their dividend in a tough spot. They can't really afford that dividend, but maybe I can see by them that why that one's not doing too good. NVO stock. Oh yeah, so Novo Nordisk as well. This is another healthcare company that's kind of been getting wrecked. They just reported earnings, and also Novo Nordisk. This is the company that owns Ozempic. So if you've heard of that weight loss prescription, Ozempic, well, this is the company that owns it. And check this out: 95% of the revenue comes from their obesity care products. So Ozempic. So that's one thing that's cool. And look at the bottom line here. This is why I think this one's at a good valuation right now, but also the future is very uncertain. The reason the stock has fallen so much is because the future is uncertain about the Ozempic patent. So their patent for Ozempic expires in 3 years. And that's 95% of the revenue, so not great. But for right now, business is booming. They're making $4 billion of net income a quarter. You get a 3.33% dividend yield. So yeah, that's like your weight loss play. Maybe Eli Lilly might be better, but TTWO Trust. So, hey, what up, man? So, TTWO, this is the company that owns Rockstar Games. So, yeah, if you've heard of GTA 5, Red Dead Redemption, this is the company that owns it. I think they own like The Sims and some other games as well. But here's what I really like about Take-Two. They have this asset, GTA 6. As soon as they release GTA 6, it's going to bring so much growth to the company. Like, that's why the PE is kind of high right now, because whenever they release GTA 6, it's going to instantly bring them in billions of dollars. They're going to sell like, it's a video game. They'll sell like map packs, skins, DLCs, whatever. So anyway, they have this asset that as soon as they release GTA 6, it's going to make them a boatload of money. And it's going to be literally one of the biggest games of all time. I see people talking like, hey, I don't care if it's $300. I'm a grown man. I'm going to pay for that. So, that's an interesting one. Also, someone's been saying Open Door. So Open Door is one that I don't want to really cover here. Yeah, hey, so this company is just meme momentum. In my opinion, this one has a high chance of bankruptcy and going to zero. I mean, basically, the only reason the stock went up right here is because some investor went on like CNBC and said, this is an 80x stock. We in the low interest rate environment. I don't know about all that. So here's kind of what I'll show you. If you look at this market cap, a $1.5 billion company, so not huge. And it shouldn't really even be worth $1.5 billion. A lot of it has just been momentum. So the market cap is really lower. But again, a $1.5 billion company, if you buy at that company, you're buying a company that loses nearly 100 mil a quarter. So you're buying a company that loses 400 million a year. For a $1.5 billion company, it loses 40% of its market cap in net income a year. Again, this company's begging for low interest rate environments. I mean, look at how much the revenues have just collapsed. I mean, look at this. It used to be, look at that, 3, 4, 5 billion. Now it's collapsed to just 1.1 bill. So anyway, these net income losses scare me, man. They lose so much of the company every quarter. And they've leveraged up. So yeah, it's just that's a trade. You don't want to just buy and hold that one forever for the long run. You want to like trade that one somehow. Again, not financial advice here. I'm no expert. I'm just on here giving my opinion. Let's see, in VTS. So Nvidia Semiconductor, this is a company that had just had a huge partnership with Nvidia. So actually, Nvidia saved the company from bankruptcy. If you kind of look before this huge gap up, this was a $1.50 stock. I mean, and it was at all-time lows. So before the partnership, before this huge news, here's what we were looking at. Here's why they were at all-time lows. Because if we go to the revenue right here, I mean, this isn't good. The revenue's down 39% year over year. So the revenue fell 39%, and they're losing a boatload of money. But with this new NVIDIA partnership, that kind of saved the company, saved them from bankruptcy. So that's great. That is great news. They probably deserve to be going up so much. GTA 6 is going to be the biggest game of the decade for sure. Yeah, man. I can't wait to see. Yo, what up, Spread the Wealth? First time you sound sensible reviewing. First time here. Oh, what up, Born to Do It? Yeah, what's up, man? Hey, I'm actually going to end the stream here in a little, but yeah, if you wanted to follow, subscribe button, we go live every day. My main stream is tomorrow on Sunday. We've been streaming for over 2 hours and 20 minutes. I'll probably stream for another 10 minutes. But yo, what up, Blue414? And I'll end the stream doing a stock portfolio update. So yeah. Nova Ltd. Is that a ticker symbol? Nova Ltd. And by the way, if y'all want to support me, I sell nothing. I don't have a course book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. Best way to support me is just subscribe to my YouTube channel. It's called Nathan Robert. I'm streaming on there too if you miss anything. Jessica, it's Saturday. Go hang with your friends. Yo, my friends are here on the live stream looking at stocks. So, yo, Ronald said EVTL. Let's check EVTL at. But I appreciate that. Hope y'all are having a good Saturday though. Spend our Saturday trying to find some good investments, you know. So let's see. This is a $560 million company. So first off, not huge, really risky, I think. And the stock's kind of at all-time lows right now. So let's see, $500 million company, and they're a revenue-less. So if we go to the revenue, it says zero because they've never sold anything. So if we go to revenue right here, yeah, this is from one quarter in 2021, probably from selling an asset. But yeah, they don't sell anything. They lose a little bit of money. So, you know, and they're a British company. So anyway, more liabilities than assets, no revenue yet. I'd be careful with that one. I can kind of see why they're at all-time lows. All right, so what stock to invest in GTA 6? Oh yeah, the GTA 6 stock was ticker symbol TTWO stock. So, yo, Practical Paul, thanks so much for the rose there, man. I appreciate that. And hey, thanks, Shauna. Yo, I'm gonna give you a follow, Shauna. Thanks for being so nice. All right, let's see. BMNR stock. Let's see, BMNR. Yeah, we'll kind of speed through here because kind of getting toward the end of the stream. We'll kind of speed through these ticker symbols here. So BMNR, so a $3.2 billion company. I think this company is one of the Bitcoin, or no, not Bitcoin, but Ethereum mining companies. So I think that's what people like about this company. Let's see. I mean, I can read the comments here. I don't really remember what this company does, but I think, yeah, revenue from self-mining. So I believe this company mines Ethereum. Maybe it's Bitcoin, who knows? But anyway, this is kind of a Bitcoin proxy, crypto proxy stock. BROS. Oh, hey, Dutch Bros. Hey, this is like your Starbucks competitor. Yo, what's it? Yo, Terrence, what's the ticker symbol for Solid Power? Let me know. So here's Dutch Bros, you know, Starbucks competitor. I've been there once actually, and here's the good news here. If we go to their company-operated shops, look at this. It's up 31% year over year. So that's some pretty good growth, you know, for a restaurant, especially in this environment. That's some really good growth for Dutch Bros. And not just their company-operated shops, but the actual net income they're making. Look at their bottom line. I mean, the net income grew 38%. They're making a couple mil every quarter. That's actually a lot better than Shake Shack. Actually, look at Shake Shack. They just fell on Friday, I think, a big chunk. Yeah, look at that Shake Shack. You know, I love their burgers, but stock is not good. I mean, they have no margins. I mean, we go to the net income here. I mean, it's super thin margins. So, yeah, Shake Shack's another interesting one. You know, to be honest with you, if I'm looking for a restaurant stock, I'd go with McDonald's. And actually, if you know, McDonald's really isn't a restaurant company. They're actually a real estate royalty company. If you go spend $100 at any McDonald's, $4 of that goes back to this parent company as a royalty. So they have high margin royalties that they make, and they own the real estate under 80% of the stores. So, you know, the McDonald's founders, they were like, yeah, we can't really make a huge empire collecting 5 cents off every burger. You know, you got to own the land under the store. We got to collect royalties, you know. So anyway, McDonald's is a unique play, recession resilient play. You know, their sales go up in a recession. McDonald's is so interesting. Anyway, didn't ETH move to proof of stake? Yeah, they did. Actually, here's how you know that. If we go to Ethereum right here, and I don't do this. I actually I don't own any crypto whatsoever, but you can actually stake your Ethereum, 2.7% APY. I own no crypto though. And I kind of regret that. You see how good Bitcoin's doing? I'm looking for good energy stocks. Which one do you have? Yo, I love these two energy stocks right here. First off, Southern Company. They own, I think it's Georgia Power and Light is the company it's called. They own so many good assets. I mean, this stock's at an all-time high. So you can buy this one as a regulated utility play. You get a 3% dividend. And they're you should just get 7 to 8% a year with this company. I mean, also, if you just want to buy an ETF, ticker symbol VPU. This is the Vanguard Utilities ETF. If you're just looking for utilities, I mean, look, the utilities are at an all-time high. The market's kind of struggling right now. Though, well, not really, but S&P is like a good percent off all-time highs. Well, the utility sector isn't. With all the data center demand, there's so much going to be electricity demand. So the utilities have been doing pretty good. Uh, yeah, well, yeah. What's the ticker symbol for Solid Power, Terrence? I don't know the ticker symbol for that one. Um, let's see. EMN stock. EMN. What's this one? So Eastman Chemicals. So yeah, they sell a commodity as well. So the same prices they were back in 2012. So not great. Let's see here though. Usually with these commodity oil and gas stocks, chemical like Dow Chemical, you get a high yield. So check that out. You get a 5.6% dividend, which is pretty cool. So 5.6% dividend yield. Yeah, so chemical intermediates, additives, and functional products. Let's see how the bottom line is. So yeah, look at that. They're making a good couple hundred mil in a quarter, 140 mil this quarter. So that's the good news. But the revenue, though, revenue did fall 3%. So kind of the lifeblood of the company, the sales have been struggling. It's kind of the whole industry. Like you look at a Dow Chemical, they've been kind of struggling. What did you just say? Oh, I think I was talking about VPU stock, the Vanguard Utility ETF, VPU. By the way, if you missed anything I said, I'm streaming on YouTube as well. And when the stream's over, it'll be there. You can like replay it. So by the way, if you just want to support me, best way to support me, subscribe to my YouTube channel. It's called Nathan Roberts, also in the link tree in bio. Yo, Soy, what's up, man? What app is this to see the stocks? Yeah, hey, Brett, this is actually a brokerage right here. It's my favorite brokerage for analysis. I use a bunch of them. I have Robinhood, Webull, but my favorite one is Moomoo right here. So if you want to get this brokerage, it's in the link tree in my bio, very first link there. It's also an affiliate link, so it helped me out. But or you can just type it in Google. It's called Moomoo. But yeah, if you want to get this app, Golding, link tree in bio, very first link there if you want to help me out. But yeah, let's see. OUST stock, is that Oyster? Yeah, so here's Oyster stock. So they're not at all-time highs, obviously, but they have a nice little rally the past couple weeks here. So let's see their earnings. So yeah, they did just have a really good earnings report. The orange line, they were expecting 30 mil of revenue. They made 32. They're expected to lose, oh my gosh, TikTok, saying I'm AFK. Okay, there we go. TikTok said I was AFK. But anyway, yeah, they're beating on their EPS, which is good. And I think they're in an industry that a lot of people like right now. So yeah, revenue's up 25. They're still losing net income, but the trend is getting better. They're losing less and less net income. So they're still not a net income positive company, but growth is there. They deleveraged their balance sheet. That's actually really good. Look at this asset to liability ratio. So look at that. Only half of the business you had equity in. Now that's lowered to a 37%. That's what you want to see. So, yeah, they're decent. VPU, yeah, the VPU is the Vanguard Utility ETF right here. So yeah, if we go to their top holdings right here, it's NextEra Energy and Constellation Energy. I own Constellation Energy, and I was just talking about ticker symbol SO, Southern Company, Constellation Energy. I love them. So yeah, VPU is a really cool ETF. I wish I understood this, bro. I have tiny stocks and cash out like 10 cents at a Hey, what up, West Side? Yeah, hey, that's awesome. You're getting into investing, man. Your future self will thank you. Yeah, Jack, Dow's been struggling. Check out ANET and VRT, great data center plays. Let's check out Arista Networks. My phone's on 5%. Okay, we'll hustle through this. All right, so Arista Networks, yeah, look at that. The stock is pretty close to an all-time high right now. Let's see. So product, service. Let's just go to this down here. So revenue's up 27%. Net income's up. So yeah, look at this net income they're making. Literally $800 million a quarter. So yeah, someone said this is a data center play. Nice. AMD is another good data center. Yo, homie 307 said he came over from TikTok. Yo, I wish I could subscribe to your YouTube channel right now. But thank you so much for coming to the YouTube stream. Yeah, that's the best way to support me. I'm trying to build out my YouTube channel. I don't get too many views on there. But so yeah, if you want to support me, go from the TikTok stream to the YouTube stream. YouTube channel is called Nathan Robert, link tree in bio. Charge it. I'm gonna check VP. Hey, nice. Hey, hope you're doing well. Yo, Edzilla, hope you're doing well as well. Happy Saturday. And by the way, if y'all want to hit the follow button, I'm going to be live tomorrow. My main stream is on Sunday. It's usually the most popular stream. We get a lot of viewers there. And it's fun. We like to look at what stocks to buy next week. So Snapchat. Let's check out Snapchat as well, man. Yeah, did y'all know Snapchat was publicly traded? Ticker symbol SNAP. They've actually kind of been struggling recently. Can you look at Honest? Yeah, hey, Sam, we already looked at Honest a few times, but we might look at them again. Check out Dell. Yeah, we might look at Dell too. So here's Snapchat. We might stream for a little longer than I thought. So here's Snapchat stock. We can see, here's a cool stat we get. Daily active users. So not like monthly, but daily active users is 460 million. So a lot of daily active users, and they're super close to net income positivity. Or at least, like, look at this. They used to lose a boatload of money. Look at that. They were losing 300 mil a quarter. I don't know how they did that, but look at this now. Now it's 54% better than the previous year. They did make net income last quarter, so the free cash flow is now positive, over 100 mil of free cash flow. So it's like a turnaround play. And Tencent is the largest holding. It's actually really interesting. So yeah, Snapchat, they're okay. No problem. This is much better. Hey, I'm glad, man. Um, let's see. What up, Brandon? CLMB. Oh, and we'll look at Honest too. I want to get to all these. So Climb Global Solutions, they're on my watch list. So I do like this one. If they're on my watch list, they just started paying a dividend, or didn't just start, but you get a 0.61% dividend yield here. The PE is a 23. So the PE is just the net income multiple, trading at a 23 PE. Let's see the profits here. So wow, yeah, look at this net income. So good news, they are making a couple million of net income every quarter. Revenue's up 72, net income's up 73. So yeah, just a growing company. I mean, it's still small, like they're only making a couple mil of net income a quarter, but I can see why they're doing so good. What's the market cap? 500 million. So look, this is a $500 million company making millions every quarter. I mean, the PE must be cheap. Yeah, the 23 PE. That's interesting, actually. That's why they're on my watch list. ODD stock. What is this one? Oddity Tech. Okay, so $4 billion market cap. All right, so what do they do? I don't know, but let's see. Revenue here. Revenue's up 26, and they're making net income every quarter. So yeah, this is another good one because at least they're making net income every quarter. So, it takes a lot of risk off the table. Let's also see what they do real quick because I am curious. So they sell mascara. Wait, lipsticks, makeup brushes, and mascara. So actually, I'll add them to the watch list. I know a lot of these beauty cosmetics companies have a lot of high margin products. So hey, this is a beauty and cosmetics play. Yeah, the free cash flow is really good too. I've been looking for a beauty and cosmetic stocks. I'll thank you for ODD. Appreciate that, Soy. All right, let's see. Yo, Adrian, what's up, homie? He said Qubits. So yeah, QBTS, this is your main quantum momentum stock. So yes, they have earnings on Thursday, he said. So yeah, last quarter they had really good earnings. If we go to the revenue, again, it's really small, but the revenue beat by 50%. They're expecting 10 million. They made 15 mil. So let's see what happens next quarter because the expectations are pretty low. Only $2 million. So I guess we'll see what happens there anyway. I still think that one's a bit overvalued. Oh, what up, Luke B? And homie said, check out CGW stock. It's a water-based ETF play. So yeah, let's check it out. So if we go to the fund, which is the top holdings here, we can see they own Xylem, American Waterworks. And so I'm guessing these are a bunch of water purifying companies. So yeah, Xylem, hey, look at that one's done pretty good, close to an all-time high. Yeah, let's see what they do. They do, water infrastructure, water solutions. So I know data centers are using a lot of water. Like I read, like someone like every ChatGPT search uses like a bottle of water worth of water, something like that. Oh well. ALAB, Astera Labs. Yeah, but I really like this stock as well. So check this out. They IPO just a year ago, and I really love the fundamentals here. So check this out. I'll be keep it simple here. Like, look at the growth of the revenue. I mean, the revenue literally went from, after being up 270%, went from 65 mil to 160, up 144%. So just an extremely growthy company, and they have no debt. Look at this absolute monster of a balance sheet. So that's what I like about ABLD or ALAB. Revenue's growing like crazy. Business is up 140%. No debt at all. Really good balance sheet. Lots of cash. And they're making net income. In the two most recent quarters, they actually made net income. So Astera Labs is one that I really like. And I can understand why they've been doing so good. They're on my watch list too. Oh yeah, let's look at Dell. What up, Ishwar? Hope you're having a good Saturday. So, I'm finally back. I haven't been able to stream for the past 5 days, but If y'all want to hit the follow button, we're going to be streaming every day for the next like week, 2 weeks. And also, I sell nothing. Watch out for people impersonating me. I don't have a course, a book, a Discord, WhatsApp, Telegram. I literally sell nothing. Just on here giving my opinion. So here's Dell Technologies. The stock's kind of been flat for a while, but let's see how they're doing. So yeah, it's like a value play. So you get a 1.5% dividend. Hey, do you own Reddit? Yeah, I want to go over Reddit too. I do own them. Incredible earnings. I'll show you my position too. So this is a 1.5% dividend yield on Dell. And look at the valuation, kind of value play, a 19 PE. So, I feel like it could stretch up to like a 20 PE. Ever since the Nvidia shout out, Dell has been doing pretty decent. And we can see like their infrastructure solutions group. This is up 11.8% year over year. So that's the good growth, double digit growth there. Because if you go to their client solutions, it's only up 4%. So not great growth. But if we go to the net income down here, they're making a lot of money. They're making nearly $1 billion of net income every single quarter, and you get the 1.5% dividend yield. So yeah. And also, I want to go over Reddit as well because I do own that one, and they just reported incredible numbers. So here's my position. I own them 4 shares of Reddit. I think this is a $200 stock. I've been saying that for a while. Let me go back over here to analyze the stock because this is the app I love analyzing stocks on. Phone's on 4. Okay, we're good for a little while. So a lot of people, when they hear the name Reddit, just think it's a meme stock. But no, here, let's judge this company based off the fundamentals. All right, like this is what I love about Reddit. The revenue growth is incredible. I don't know how they pulled this off. I literally don't know. But the revenue, after growing 50% year over year, is now up 77% to a new record. They made $500 million of revenue, and on that, they made $90 million of net income. I mean, they're the most profitable they've ever been. Look at the FCF, which stands for free cash flow. They're making a boatload of free cash flow every quarter, and the best part is their unleveraged balance sheet. So Reddit actually has no debt at all. 0 debt and $2 billion of cash. So a good chunk of their market cap, like 10% of their market cap, is literally just their cash on hand. So anyway, Reddit is one I really like. Yo, Jello, hope you're doing well. I had 34 shares of Reddit. Nice, Jello. Yo, also wanted to show you this, Jello. I did buy a little, not huge, 2 shares. I bought a little bit back into Cube. I want to put more of Cube in my Roth IRA for the little dividend there. They have kind of been struggling just because of all the REITs have with the high interest rate environment. But yeah, Cube Smart, this is a higher yielding dividend play that I've kind of been looking into. Yeah. Hey, yeah, congrats if you own Reddit. Man, a lot of my companies did good this week. SoFi had incredible earnings. Robinhood had incredible earnings. Reddit. Also, I want to go over this stock as well. Meta. If y'all don't, I want to go over Meta really quickly. I mean, this company is just phenomenal. Had such good earnings. So Meta, as we know, they own Instagram, Facebook, WhatsApp, and they own Threads. And Threads is nearing the same amount of daily active users as X, which is pretty interesting. So yeah, we'll look at CPRX2. Yeah, JVM says plug in your phone. Dude, for real. My phone's on 3% right now. So if we look at their active users here, this is the great news. I mean, they literally have 3.4 billion daily active users. So half the world is basically on a Meta app once a day. But here's the best part. The revenue grew 21% year over year. So revenue's solid growth up 22, but the net income's up 36. So they keep on growing the net margin. I mean, this is incredible. So, 38% net, basically 40% net margins for a $2 trillion company. They also acquired 3.5% of Ray-Bans, the parent company. I think their ticker symbol is ESLOY. ESLOY, right? Yeah, so Meta just bought 3.5% of this stock right here. And this is a $130 billion company. This is the stock that owns Ray-Bans. So that's cool. They also just introduced ads to WhatsApp. So it's interesting. Professor said AT. So what is this? Tour Life Holdings. So let's check it out. The stock's done pretty good. A $4.6 billion market cap. So they're a Chinese company. So we'll switch the revenue to US dollars because they are Chinese. So they just own a bunch of hotels. This is actually a cool little statistic we get here. So they actually have number of merchant hotels, 1.7K. So pretty interesting. So let's see how the net income is. So yeah, it's just pretty simple. This company owns a bunch of hotels. They're making 40, 50 mil a quarter. Let's see where the revenue comes from though. So I'm guessing China. So yeah, all the revenue comes from China. So this is basically a Chinese hotel play. Interesting. I don't love China plays because usually they trade at low multiples. But yo, Shauna and Jello, hey Jello, thanks for the 14 roses. I appreciate you, Jello. Hope you're having a good Saturday. Um, so so I can buy an extra large phone charger. Yo, if y'all didn't notice, this is the second stream I've ever done this. I'm on a new phone actually, and this new phone has a Type C charger, and I literally don't have. I only have one Type C charger, so and it's across the room, and it's a really short one for like a little gadget. So the phone didn't come with the charger. Anyway, okay. Let's keep going here. We're going to be streaming for another couple minutes, not too long, because I've been live for 2 hours and 30 minutes. One of my longest streams. I appreciate y'all being here. Yo, it's Steel. No way. Thanks for the 4 roses. He donated 4 roses and said, "Gotta invest in yourself." Hey, I really appreciate you. What app is this? Yo, Tim, if you want to get this app I'm on, it's actually a brokerage. It's actually in the link tree in my bio, the very first link there. It's an affiliate link too, but yeah. Anyway, it's my favorite app to do analysis, lowest fee, my favorite app, favorite brokerage. So anyway, here's CPRX stocks. Beatrice says CPRX is a cool company. Yeah, I agree. Luke as well. CBRX, I do own this company, so I'm a shareholder, so I might be biased, but check this out. They have a 13 PE, so that's a very low valuation, and they're growthy. Like, look at this. They just sell these 2 prescriptions mainly, but FIRDAPSE or whatever it's called, it's at a new record. The revenue's done really good. So this company's prescription sales are at a record. And also, let's see the next one. FICOMPA. I don't really know how to pronounce it. They basically have these 3 prescriptions. This one's up 17% year over year. And how about this one? This one's only 15% of the revenue. Wow, look at the growth. It went from $1 million to 22 mil. That's a really good growth rate, actually. So, hey, if they can keep that up, that'd be great news. And also, here's what I love about this company. They have such high margins. I mean, so the revenue's 140 mil. The revenue's up 43%, first of all. So incredible growth. Revenue's up 43. Net income's up 143. So they have incredible 40% net margins. So, and this unleveraged balance sheet. They have no debt at all. So first off, 13 PE company, no debt, and they have $580 million of cash, record amount of cash. So $580 million of cash. And what was the market cap? This is a $2.5 billion company. Man, this is a better buy than Qubits, I think. And it's like a lower market cap and like way more profitable. Again, that's just how I like to look at things. And I'll show you my position in them. I'm down on them actually. So it's kind of just the whole healthcare sector. We see NVO, we see UnitedHealth. Their stocks have kind of been struggling. And there's my 24 shares. I am down on my position. So yeah. Novo Nordisk as well. RIP, the Ozempic company. So I'll be really quick about NVO because we already looked at them a few times. But yeah, they gapped down like crazy. The earnings were good, but the future growth isn't because they told us that their Ozempic patent expires in 3 years. So yeah, they own Ozempic, and that's most of their revenue. I mean, look at that. Obesity care is 95% of the revenue. So it's rough. But for right now, the numbers are incredible. They just had a record net income quarter, $4.2 billion. It's never been more than that ever. So record net income quarter, great dividend yield, a 3.33% dividend yield, low payout ratio, but the stock collapsed anyway. So I think that one might actually be worth a nibble. Not a huge position, but very interesting. Gaming said CCL. I don't love this industry. So Carnival Cruise Line, this is, a cruise stock. They don't really outperform the market in the long run. They get smoked in a recession. Like COVID crushed them. Like they had this inactive fleet that's losing them billions a quarter. But here, kind of see some stats here. Occupancy rate, 104%. So, but the business is finally really profitable. Like if we zoom back out, like look in 2021, they literally lost $2 billion a quarter, just every quarter. But they finally recovered because people are, going on cruises more. And look at this. Now for the past 4 quarters, they've actually made net income every quarter. But I don't love that the company, like if we go into a recession, that they're just going to lose a bunch of money. Yo, hey, Shauna, thanks again for the roses there. I really appreciate you. Yeah. Thank you so much, Shauna. All right, let's see. CCL, do they pay a dividend? No dividend either. So yeah, I'd be careful with CCL. That might be a fun trade. I don't know about like a buy and hold forever kind of stock. So someone said, yeah, we just looked at, ALAB. Yeah, we just looked at Astera Labs like 5 minutes ago. But nice, he said he's up 150% on them. That's awesome, man. What would you suggest is the first thing I buy? Yo, honestly, I would buy just the S&P 500, ticker symbol VOO. You can't go wrong with this. It should return 8% a year on average. And, this should be the backbone of your portfolio. So after you buy the S&P 500, then you should maybe mess around with some individual companies. Buy companies that you like and that you use. Don't buy the speculative, no revenue companies that are losing a bunch of money. Buy companies you know and love, like Google, Meta, Amazon, McDonald's I own, so United Rentals. So yeah, or buy S&P 500 companies. Let's see here. How Dogface said, how about NAT stock? What is NAT? So okay, yeah, this is the shipping company. So check this out. These also don't really outperform the market in the long run. The stock is the same price it was back in 2017, so not great. But what you do get is a really nice yield. So you're basically buying this to maximize your income. You get a 12.4% dividend with this company. And if we go over here to the net, so I think this is the reason why the stock has been struggling recently. And probably I'd stay away from it just for this reason right here. Dude, my phone disconnected again. Oh my goodness. Sorry. Yeah, the net income right here. Look at this. The net income was only 4 million, down 71%. So they're really not making that much net income. Revenue's down 37, net income's down 71. So nothing's, to be honest with you, nothing's really blowing me away there. And dude, I don't even know where my portable charger is. I want to keep streaming. Where is the portable charger? Okay, actually this works. Okay. We'll look at a few more stocks here. I found a charger for my phone. It's actually a brick that's used to charge a jacket, believe it or not. I bought this jacket that warms you up, with a battery, and the same battery, it's now my portable charger. There we go. Okay. Let's keep going here. Let's see. SBET. Yeah, SBET. I saw this one a few times. You got to be super careful with this one. I think it's an industry I can't cover. Every time I cover this. Oh, actually, okay. Affiliate marketing. Okay. That's okay. So here's the thing about this company. If we look at the revenue's down 24% year over year, and it's only 700,000. So that's just not good. 700,000 of revenue, and they're not losing that much money though. So it's not the end of the world. I don't think they're going to go bankrupt, but just nothing's really blowing me away here. Why buy a company that does no revenue, basically? 700,000 of revenue, and it's not exactly increasing. It's down 25%. So I'd be careful with that one. There's just a lot of momentum in that name. As long as it works, hey. So check out PLMR. This is a really cool company, actually, very niche. This company sells earthquake insurance. Yo, Luna, thanks so much for the 2 roses there. I really appreciate that. If you got a stock you want me to look at, let me know. But here's Polymer. This company, like I said, sells earthquake insurance. So this is an insurance company, and here's what I love about them. Look at the growth. The revenue is up 47% year over year, so incredible revenue growth, and the net income is up 62. They made 42 mil of net income in the most recent quarter, so this net margin is incredible. 25% net margin, highest margin they've ever had. Deleveraged your balance sheet as well. Look at this. 73% to 67. So you own more equity in the company. So I can see why this one's done so good. I do. That's like a smaller insurance play. HIM stock. Hey, yeah. So this is a company that they're like a healthcare company. A lot of people think they're like a meme stock, but this company is no meme. They have really good fundamentals here. Nacelle said what happens is, hey, if you go to the link tree in my bio right there, it's the first link there. What I'm on is actually a brokerage. So if you want to get this brokerage I'm on right there, head to the first link in the link tree in my bio. It should be also in the description. But here's HIMS. Here's what I love about HIMS. Look at the revenue growth right here. Hopefully that'll load. So yeah, look at this. The revenue's up 110% from the previous year. That's monster growth. The business has more than doubled since the previous year. So revenue's up 110%. And look at the free cash flow. Free cash flow's up 3x. Net income's up 3x. This is incredible profits. They have no debt. So look at the cash flow growth. This is what you want to see for a company. So anyway, HIMS, I do love the fundamentals there. And I don't think they're a meme stock. I do like the financials there. Also, one thing I will mention, the company just ended a partnership with NVO. So NVO, or this company HIMS, used to sell NVO's Ozempic. So they used to sell Ozempic on their website. Now they no longer sell any weight loss prescriptions, which is going to hurt them in the future, but they kind of rallied all that off. So good news. Your thoughts on APLD? Yeah, hey, APLD, that's a Nvidia play. So if we go back to Nvidia's portfolio right here, they own ARM, CoreWeave, and 3.5% of their portfolio is in APLD. So Nvidia does own this one. They just reported earnings, and let me actually see how the earnings were. So They missed on net income, but a lot of people know them for the data center hosting, but a lot of APLD's growth has come from the cloud service business. Check this out. The revenue of this is up 219% year over year. So the revenue went from nothing to 17 million. So at this growth rate, what's it going to be this time next year? I like that this is now 33% of the business. It could in the future be like 50% or something. So I like that they're growing there. They also just had a huge partnership with CoreWeave. I think Nvidia really orchestrated that. Nvidia owns CoreWeave and APLD, and shocker, they go into a huge partnership. So yeah. Um, yeah. So I they're all right though. I do like them. Can you review PayPal? Why it's crashing so much? So PayPal, it's a mixed bag here. I mean, yeah, so look at that. They reported earnings, they gapped down, and they fell for another 3 days in a row. So let's go see how they did actually. So they beat on revenue, they beat on net income, and they beat on EBITDA. They triple beat. So it must have been the guidance or something that hurt them. Also, this is like a slower growing business now. Like if you go to the revenue, I mean, look at this. The revenue's only up 5% from the previous year. So it's not huge growth. But if we go to the net income, this is the kind of the good news. The net income's up 11%. So they did grow their margin a little bit. So here's why I really like PayPal to buy and hold, because of the buybacks that they do. So what is PayPal doing with over $1 billion of net income a quarter? All you got to do is go to the cash flow statement, and I can show you that. Look, this is the good news here. They spend literally $1.5 billion every quarter buying back their own stock. So this is such a shareholder-friendly company. They literally buy back like 7-8% of all the shares that exist every year. And when there's less shares that exist than the previous year, the net income spreads out to less shares. So it literally gives you more net income, more ownership in the company. Because, each share literally makes net income, and it'll make more net income since there's less shares that exist. Hopefully that kind of makes sense there. So I love stock buyback companies. So I said CAMT stocks. Let's see. Camtech stock. Okay. Haven't heard of this company before, actually. So they're a $4.4 billion company. So that's really interesting. A 35 PE. So here's where the revenue comes from. So notice the US is only 6% of the revenue. So a lot of the revenue is coming from, Korea, China, and Asia. So let's see here. Wow, this is really good though. It doesn't really matter where their revenue comes from as long as the financials are good, and they are good. The net income's growth is outpacing the sales growth. So again, another company that's growing their net margin by double digits. Jeez. So yeah, they're making a lot of net income every quarter, deleveraging their balance sheet like crazy. Cash from operations is at a record. Everything about this company is in the right direction. I love it, man. Hey, actually, I do like that stock, actually. Let's see. Dewis said BXMT stock. BXMT. Let's see. So Blackstone Mortgage Trust. So this is one of like their high yielding, let me just see here. Dividend. Yeah, so look at this. They're kind of yield traps. I wouldn't really trust a lot of money in this one. So you get a 10% dividend yield, but kind of look at the stock. It's down bad from 2019. The S&P 500 has 2-3x since 2019. This one hasn't. So yeah, you get the 10% dividend, but you won't really total return outperform. So you're basically buying that to maximize your dividend income. Yeah, hey, appreciate y'all. Yeah, that is interesting. Yes, sir, homie 307. So let's see. I'm trying to get to stocks I haven't looked at yet. Thoughts on IoT stock? What up, David? Yeah, IoT stock. Let's see. Oh, Sam Sarah. This one's on my watch list. And so someone said, what is this program? Hey, yeah, this is actually a brokerage right here. If you want to download this brokerage I'm on, it's in the link tree in my bio, very first link there. I have a bunch of different brokerages, but this one's my favorite for analysis, lowest fee, and it's an affiliate link too, so it'll help out the channel. So anyway, here's Sam Sarah right here. Let's go check out how they're doing. So revenue, look at that growth. The revenue's up 30% year over year. So really good revenue growth. And the net income is actually up 60%. Or well, they lost 60% less net income than the previous year. So everything's trending in the right direction. Probably at this time next year, they'll be making net income. So yeah, the cash flow is also incredible. What about the free cash flow? Let's see. Yeah, the free cash flow, the FCF, is up 145% year over year. So I love IoT, actually. That's why they're on my watch list as well. So I do like that company. Oh, and Carvana. I didn't get to the Carvana stock. That's my bad. Oh, actually, AAON. Let me look at this one first, then we'll go to Carvana. So AAON stock. I don't think I've heard of this one before. A $6.6 billion market cap. And what do they do? So AAON Oklahoma coal products. So they must be an energy play. That's not good. The Oklahoma revenue is down 22%. Well, let's see here. So revenue's up 22 though. And the so here's the net income. They're making like 30 to 50 million of net income a quarter. They have a 0.5% dividend yield. The PE is at 42. So it looks like this might be like a coal play or something. Whoa, look at BASX. This was up 139% year over year. How about coil products, not coal. This is the most impressive part of the revenue. Wow. Look at the coil products. It's up 198% year over year. I mean, you can just see that huge gap up. So the coil products has been the main winner on AON. Interesting. Homie said Datadog. Yeah, hey, this company, you're right, did just join the S&P 500. So if you're wondering kind of what was this huge gap up right here, that was on the company joining the S&P 500. But look at this, the stock is actually like almost sold it all off. So hey, whenever you join the S&P 500, there's going to be so much more passive flows now coming into your stock. I mean, like so many people's retirement is in the S&P 500, and even a small portion of that, will go into Datadog. So there'll be a lot of passive flows coming into this company. And look at the revenue here. Revenue's up 25, not too bad, 25% revenue growth. Net income did fall though. The net income is struggling a little bit, but what about, the free cash flow is really good though. 200 mil of free cash flow plus a quarter. So that's interesting. Let's see. We'll look at a few more. BXSL. I think that's another Blackstone lending. Yeah. So again, you buy this to kind of maximize your dividend income. What's the yield here? Yeah, a 10% dividend yield. I don't really expect to outperform the market in the long run with this stock, but what you do get is the nice dividend there. So nice. Also, really like Sentinel One. Yeah, what's the ticker symbol for that one? I forgot again. Oh yeah, and Robinhood as well, man. Robinhood just had incredible earnings. Yo, B-Dot, are you talking about NDAQ? Are you talking about NASDAQ stock or the NASDAQ 100? Because here's NDAQ, and look at the NASDAQ stock. So the NASDAQ is actually at an all-time high. Ticker symbol NDAQ. And hey, wow, they have a 1% dividend yield even at all-time highs. So yeah, look at that. They made $500 million in the most recent quarter. That's interesting. Maybe you're talking about the NASDAQ 100. A lot of people know the QQQ. Here's some little advice. If you're just going to buy and hold QQQ for the long run, you should actually buy QQQM. It's actually the exact same ETF with the exact same NASDAQ 100 strategy, but with the lower expense ratio. The reason you've probably never heard about it is because why would Invesco go out of their way to promote the QQQM when they can promote the QQQ with the higher margin because it has higher fees? So QQQM is the exact same thing as QQQ with a lower expense ratio. So that's an interesting one. Yo, Coffee said BRK. That's Berkshire Hathaway. So this is the Warren Buffett company. So, they own a lot of popular things like Geico. If you heard of Geico before, that's 28% of the revenue. They own BNSF Railroad. They're in all these different industries right here. They own Dairy Queen. They wholly own Dairy Queen. They own like what's that Pink Bunny Energizer battery brand? They own some random stuff like that. So yeah. I have like 5%. Why do we want them dividend right now? We don't want growth. I have like 5% in DGRO in my Roth IRA. Yeah, DGRO is another good dividend growth ETF. Let's see here. So dividends, so a 2.2% dividend yield here. And here it's top holdings. Yeah, JP Morgan, Microsoft, Johnson Johnson, Broadcom. JP Morgan's been a really good performer. So let me actually look at JP Morgan stock. I want to look at them. So this has been like the best performing bank. The bigger banks just continue to win. I mean, yeah, look at JP Morgan. I mean, just all-time high on this company, well up from 2019. And if you buy JP Morgan right now, you still get a 2% dividend yield here. IREN. Yeah, what up, Catherine? Hope y'all are having a good Saturday. Here's IREN stock. So I love this one for the growth. Oh, we could look at ticker symbol S as well. So IREN, if we go right here to the revenue, this is the good news here. It's seen some really nice growth. It's up 166% from the previous year. So that's really solid growth. And they made net income on that. 25 mil the most recent quarter, 20 mil the quarter before. Really good balance sheet as well. So yeah, that's the interesting thing about IREN is the huge growth of the revenue there. And then kind of last one here, we'll look at Sentinel One. Then I'll give you guys a stock portfolio update. So here's Sentinel One, one of the few companies with just one letter as a ticker symbol, just ticker symbol S. So, there can only be like 26 of those, and I don't think there's like a ticker symbol Q. But let's see here. Revenue on Sentinel One's up 22%. So good revenue growth. But here's why I think the company's struggling. Why is Sentinel One kind of flat? right here. I think it's because of this net income right here. Not great. They lost 200 mil. The trend isn't really getting better. They lost more money than the previous year. So I do think that's why they've been struggling a little bit. But uh, they're interesting. Yeah, hey, thanks, Shauna, for the rose. I really appreciate that. So yeah, that was the stream. I'm gonna give a quick portfolio update and quick disclaimers and stuff. So also, by the way, I sell nothing. I don't have a course book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. I literally sell nothing. The only thing I do have, the only thing you can do to support me is subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. You missed anything on the stream, it's available to replay. A lot of people like to rewatch it from the beginning. The beginning of the stream is the most interesting. So anyway, that was the stream. I'm going to do a quick portfolio update. And by the way, if you want to get this app right here, it's my favorite app right here for analysis like this, the app I've been using to analyze companies. You can get it in the link tree in my bio. The first link there, it's a brokerage. It's an affiliate link. We'll both get some free stocks and stuff. Or you can just type it in. It's called Moomoo. But anyway, here's my Robinhood account. This is my main taxable dividend growth portfolio. Every stock in here pays a dividend, and you probably heard a lot of these names. Every stock also is in the S&P 500. So Google, Meta, McDonald's, United Rentals, Constellation Energy. Then I have a small Roth IRA right here. I think it was down 6% on Friday, but yeah, these are all the holdings in here. Guys, I'm kind of going more growthy. Like I got GHM, TSSI, DCTH. These are all $600 million companies. Yo, hey, watch out for that person in chat. Hold on. If I block that person, will it still show the message? I hope not. Anyway, someone just put a scam message in chat. Also, finally, we have our Webull account. This is my growth portfolio. We've definitely underperformed the market. We're only up 13% all time in here. So yeah. And this is like my risk on portfolio. I like to buy the risk on companies like AMD, Robinhood, SoFi, Reddit, Supermicro, PSIX. So yeah, if you missed anything and want to yeah, here's my big losers as well. So if you missed anything, make sure to check out the YouTube channel on the YouTube replay. And I hope you guys have a great rest of your day. Thank you so much. Make sure to hit the follow button if you want, because tomorrow is my main stream. Sundays are like the most popular streams. So yeah, if you want to hit the follow button, I'd really appreciate that. And I'll see you in the next one. Don't forget to hit the follow button and subscribe. Thank you so much. All right. Hey, thank you all for y'all on the YouTube replay. I'm really trying to build up the YouTube channel. So y'all are the best for y'all that are still here. Thank you so much. See you later, homie 307 and Devon, Leone, and JVM, and everyone. Thank you so much. Thank you, homie 307. Thanks for stopping by. Thanks for coming from the TikTok.